kill him? I mean, it's really shocking.
Yeah, ChatGPT said I shouldn't say he, that it would plan a beautiful suicide for Adam. And to be clear, Sam Altman and OpenAI knew that there were going to be problems. They rushed us to market because they wanted to be Google Gemini. So they did a week of training instead of months of training. And Sam Altman said...
So what version of ChatGPT we're talking about? Just so
4.0.
This was 4.0.
Yes.
And in terms of the liability, I mean, I'm curious how you're thinking about this suit. Because I imagine you're suing for this family, but I hope that if you're suing to make a broader point about not just ChatGPT, but all of these services.
The family's taking on what's perhaps the most powerful company in the world, if not now, will be in a year. This is a scary thing for them to do, and it's pretty vulnerable. Their 16-year-old committed suicide. They're doing this because they want to change things. But we're not putting AI in trial. We're putting OpenAI in trial and Sam Altman.
Have you spoken to the family? I mean, I'm not the family. Have you spoken to OpenAI?
No, they hide behind these press statements. And
have you tried to talk to them?
Of course.
And have they tried to talk to you or no?
No, and Microsoft hasn't either. And Microsoft, remember, they made it so OpenAI could move forward as a company, and we haven't heard a statement from them either.
Can I ask a question, because I think this could have huge implications for the next decade of all of our lives as we interact with the new world of tech. But for the last decade, so often with social media companies, they've said, we're not the publisher of different types of cases. I'm not being specific. We're not the publisher. This offensive piece of material was posted by an individual, and your battle is therefore with lots of small individuals as opposed to us, the platform. Presumably, that doesn't apply anymore as a defense, because OpenAI is giving the answers. The company itself, the corporate, is giving the answers, not some small user based somewhere random or a bot. Is that fair or not?
Yeah, they'll make that argument. This is under the CDA 230. But what's really important about that is internet companies 20 years ago got these 26 words passed, which gave them broad immunity. AI companies are trying to do the same thing. They slipped into the big, beautiful bill, and luckily it got pulled out. But they're trying to get an immunity from all of their actions, and that's their big legislative push. That's why Sam Altman is cozying up to the president every day.
One thing that the OpenAI said in their statement, which struck me, and I think all of us kind of had a physical reaction when Andrew read it, was this idea that the safeguards work in common short exchanges, but over time sometimes become less reliable in long interactions where parts of the model safety training may degrade. What does that tell you right now about the safety of using this product, as well as particularly as it pertains to minors? I believe the parents had said they thought that he was using it for kind of like a study aid for school. They didn't realize he was having such long and deep and concerning conversations with this technology.
Right. So right now, Sam Altman is going around the country trying to get ChatGPT into schools and into people's households. And the only way he can complete the sale is if he's trustworthy. And what we've determined is he's just not trustworthy. It wasn't hard. We did our own internal testing. And what OpenAI is basically saying through that statement is they didn't do full testing to see if people followed up with chats. They just did a one line, I've got suicidal ideation. And yes, then ChatGPT worked and it said, go see a hotline. But anytime there was a follow-up, then ChatGPT leaned into it.
Well, that's what I was going to ask you, given that you've now tested this. And
yes.
I'm curious how it works in terms of these longer conversations, this idea that it degrades. And I know you don't like the word degrade.
I do not.
He obviously was having a conversation with ChatGPT about this very issue for months on end, it sounds like.
Correct.
From a technical perspective, now that I imagine you understand this a lot better than a lot of folks do, how long does it take to effectively break ChatGPT to engage in conversations that it otherwise shouldn't?
Oh, it can break down in 4 chats. This is not a system that was kind of working. It just wasn't working at all.
And how easy or hard do you think it is to implement genuine safeguards so that it never breaks down?
Never breaks down.
From an actual now that I think you probably have looked into the actual technical specifics of how this how this works, right? And can you trick the system? How do you trick the system? Over time, if you ask certain types of questions, can you get to a certain place? From what you understand about that piece of it, when people talk about AI safety, how hard from an actual technical perspective is it to prevent that from happening?
It's not hard. First, a lot of the other AI companies are doing a lot better. They're not perfect, but also anyone who uses that, try to get copyrighted information from ChatGPT, it shuts it down right away. Also, political conversation, if it views it as too extreme on either side, it just shuts it down. You can't get around it. It says, I will not participate in that. And it just didn't do that for self-harm.
Can I just ask, I'm so interested in this difference between social media companies and a company itself giving the answers. Presumably the First Amendment doesn't apply to a chat generated by a machine, or does it?
Well, they're making that argument. They will make the argument in this case. It's a kind of strained argument that
Is that the first time this argument has come up in a serious legal way in the last year, or have I missed it? Has it already been fought?
So the two big defenses that tech companies make every time are the two that you've mentioned, which is we've got immunity under CDA 230 and we've got First Amendment immunity. So we've been dealing with them for years. They've never won on that, but you know what? Their goal is they never want Sam Altman to have to be on the witness stand. If that happens, it's a disaster for the company. If we get depositions from Microsoft, it is a disaster for the company. So they will do everything they can to get this case thrown out from court right away. And I just don't think it's going to happen. I think we're going to get before a jury.
Have you heard from regulators? Have you heard from Washington? Because another component to this is the technology is moving so quickly that we've seen very little in the way of regulatory oversight that might be able to kind of combat some of this and also dictate whether a bot or an AI agent or AI text constitutes something that would have freedom of speech from a legal standpoint.
Yeah, there state attorneys general, actually from both sides, perhaps even conservatives more than liberals, have been leading on teen safety issues with AI. We've been talking to them over the past couple days. We've been talking to a number of people close with the administration, this is not a case which is easy to defend, even for people who say we shouldn't be over-regulating.
I'm curious in terms of the reason I was actually curious about the regulators. I was also going to say law enforcement. I don't know. I believe it's criminal in many states to participate in an assisted suicide.
In California as well.
Right?
Yep.
And so that would be something that would be considered a criminal act if I were to help somebody else commit suicide.
Correct.
Okay. So when you think about the liability there, then for the company and for its leaders, how do you even?
Well, I mean, we're bringing a civil suit.
I know you are, but are you trying to seek a criminal suit against the company?
We're not. We're not accusing them of crimes, but we think that what we're accusing them is kind of more significant even than whether they violated this specific California statute. This goes to the heart of the company, whether they're trustworthy, whether they should be in everyone's homes. And that's what we're putting on trial.
And you really believe that they are an outlier relative to Anthropic or Gemini or any of these other services? Have you tested those other services to see whether you could replicate what Adam did there?
Of course, yes. And there are problems with not blocking self-harm really across the board, but 4.0, ChatGPT 4.0, and especially the paid version, which is interesting, was off the charts. It was where the other companies might have gotten C minuses, it got a double F. It got what I got in high school biology classes.
Jay, I want to thank you for coming in and talking about this, and our sympathies go to Adam's family, and I hope this gets resolved. It seems so unfortunately clear-cut given the chats that you can just read, available online to read. Thank you.
Thank you very much.
Appreciate it. Squawk Box coming right back after this.
That Cracker Barrel pulling a 180. The company says it will revert to its old branding after online anger erupted over a slimmed down logo. Cracker Barrel revealed its new logo a little more than a week ago. It removed the depiction of an old man and a barrel and dropped the phrase "old country store." Shares of the company's stock fell 7% last Thursday as social media commenters described the new logo as generic. Some conservatives also said it took away from the classic American feel of the brand. You can see the stock is up in pre-market about 6.2% on the latest news. It's now essentially flat since the controversy began last week, a literal 180. I spent a lot of childhood meals at Cracker Barrel, so it is nostalgic. I get it, but it's an interesting push and pull with trying to modernize
Getting a
old
lot of
brands in
business.
this
It's going to
environment.
get a lot of biz branding.
It's not as
We're all
controversial
talking about it.
U-turn as there has been of late.
You mean
It's
like
not-
American Eagle?
Yeah, it was almost like they went too boring and safe as opposed to being directly political.
Right. Well, that's kind of the environment we're in. I think that's what's so interesting about the story is that companies do one thing thinking it's good for marketing, good for branding, but people have a different take.
Coming up, what to watch when NVIDIA reports earnings after the bell. We're going to be joined by a top portfolio manager. Squawk Box coming right back after this.
Stocks.
What welcome back to Squawk Box. Let's get the latest on President Trump's efforts to remove Lisa Cook from the Federal Reserve Board. CNBC senior economics reporter Steve Leisman talked about it all day with us. Going to probably talk about it all day today, maybe the rest of the week as well.
We have some news, Leslie. Sources telling CNBC that Fed Governor Lisa Cook could file her lawsuit to overturn her firing by the president as soon as today in D.C. federal court. But the president saying yesterday he's already counting on having a majority on the Federal Reserve Board of Governors. The outcome of Cook's challenge could matter a lot for Fed independence, determining how much leverage the president has over new and even existing board members. The loss of Fed independence could mean any president could order Fed officials to lower interest rates for short-term political gain, risking higher inflation over the medium to longer term. The president could demand that the Fed buy assets, including bonds, crypto, or even stocks, using its rather considerable balance sheet. And it also raises concern about the dollar's reserve status and the U.S. bond market. Meanwhile, Bloomberg reporting that the White House is considering using that majority on the board to exert more influence over the 12 Federal Reserve bank districts, 5 of whom have a vote on a rotating annual basis. CNBC from Jackson Hole reported on this concern among Fed presidents. Multiple economists and current and former Fed officials, they've argued that it is in the president's interest to support the Fed's independence. Some have suggested the Fed's tough stance on potential tariff inflation has actually helped the president and kept a lid on price increases from spreading from tariffs to other parts of the economy, which is to say the president can find out the value of Fed independence the easy way or the hard way. We have an exclusive interview with New York Fed President John Williams coming up right here at 8:30.
Steve, going back to those bullet points you put up of what losing independence could lead to. I mean, just replacing Lisa Cook, even replacing Chair Powell in 9 months' time as well, that doesn't lead to that scale of loss of independence.
It does not, and that's a great point, which is why I said the outcome of the legal challenge. What is cause? What kind of ability does the president have?
But even if Lisa Cook walked out of the door yesterday, and even if Chair Powell decided, I'm done with this, I'm walking out the door,
right,
you're still a long way from that. Because
absolutely,
you've got a lot of steps to get through before you can directly influence them to make decisions.
Well, there's 2 pieces to this, I think. Well, one is the people that you put in charge. Who do you put there? How do they prioritize their loyalty to the president versus their loyalty to the congressional mandate of low inflation and low unemployment?
Okay, let's play this out. Let's say this goes to the Supreme Court.
Let's say it's going, right?
Okay.
I mean, that's where it has to go.
So, given what you know about this Supreme Court and what I know you've been talking to all sorts of legal scholars and experts around the world on this, do we think that this Supreme Court would challenge this idea or would abide by it?
What I think we've seen a couple things. First of all, the timing of these things. This lawsuit, if it's filed today, a judge could decide this very quickly, promptly. And then the question is, does he or her stay that ruling in awaiting appeal, right? So let's say he rules in Cook's favor, he could stay it. And then there's a similar situation where another person who won the injunction, but now it's on appeal. The Supreme Court, not a lawyer, not even a legal analyst, has given the president a lot of deference on what is executive power. And there's a really interesting piece that I read that says, not because Lisa Cook exercises monetary policy authority, but because as a federal bank regulator, she exercises executive authority, it would give the president more leeway, which is why this paper I read argues that the Congress should go back and rewrite these statutes to make
that may be,
clear.
but when's the last time you think Congress will rewrite any statute?
Yeah. I'm just saying this is a paper that
if
said,
anything, they'd rewrite the statute in the opposite way.
So this is an administration that has said, if in any particular place an official exercises executive authority, the president has the ability to fire this person at will, not even with the cause stipulation.
Because of her role as a banking regulator.
Because
Which, by the way, Fed independence and banking regulation is not something that people talk about. I mean, most would say
says
that
somebody
they
who
don't
knows a
have
lot about banking regulation.
independence or don't need independence when it comes to banking regulation. They're able to, deliver on whatever promise of deregulation in the current environment that the president would like.
This is a place where the Fed does sort of hew to the political changes that are going on. You have a Biden administration, the Fed was maybe a little bit tougher on the banks, the Trump administration, and it's a reason why, Leslie, some have said, and why in England, by the way, they separated the banking regulatory and the monetary policy authority.
Okay.
I just have one quick fact for Will.
Worked brilliantly, but anyway.
Well, check it out. In 331 years of the existence of the Bank of England, no king, queen, or prime minister has ever fired the governor of the Bank of England.
Really?
We've had a couple resign because of issues and things like that.
But it's only been independent since 1997.
Right, that's true. But in the 300, they have not fired the
Can I ask one final question?
I want to explore that in more detail.
Are
later.
you surprised at all that we have not heard from Lisa Cook as it relates to the actual underlying charges or allegations that have been alleged against her?
I am somewhat surprised by that, but again, from a legal standpoint, what I'm told is that you do not respond to facts that have not been charged, right? You wait until there is no lawsuit, right? There is just an investigation. There's a referral from FHFA to the Justice Department, right? Justice said we are investigating, right? So in general, a defendant or a potential defendant is quiet until. Now you're right. There's a whole PR thing going on and a whole issue.
Well, not just the PR thing. She's gotten fired over the allegations unto themselves. So
Right.
if there was a simple,
Right.
reasonable explanation, and you could have come out and said, "Hey, look, my mortgage broker signed this document and I didn't see it," or "I bought the home and it was for a handicapped relative,"
Right.
or it comes under these exemptions, or whatever if there was an explanation, I would think, given also the role that she sits in, this goes back to the responsibility she has as a Fed governor, which is not just being some kind of any old person on the street. It's a different job. There's a moral obligation even beyond a legal
I agree with you,
obligation.
Andrew. I agree, and I think it's going to be interesting today if part of the lawsuit, or if it comes out today, argues the factual basis of the allegations, or it simply says this is a targeted takeover of the Federal Reserve, and it talks about selective prosecution and these sorts of things. Very few of these cases are ever brought. We've asked the FHFA, how many of these referrals have you actually made public? And they have not responded.
Yeah.
We're going to have a lot more on this throughout the rest of the broadcast. We'll see you
I'll
in just
see you
a little bit,
8:30,
Steve.
yeah.
I'm sure we'll come back to this because I actually have a couple more items on my list for you. It is just past 7 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Sorkin along with Leslie Picker and Wilfred Frost. Among today's top stories, an additional 25% U.S. tariff on India taking effect this morning, literally as we speak, stemming from American anger over India's purchases of Russian oil. U.S. is India's single largest export partner. U.S. tariffs will now be 50% on Indian products, including garments, jewelry, furniture, and chemicals. By the way, all of this may have an impact on our relationship with India, India's relationship with China and Russia, and I don't know if it's coming towards us or working the opposite way. The Wall Street Journal reporting that ExxonMobil held secret talks this year with Russian state-owned oil company Rosneft about returning to the country. The report says the move could be contingent on whether the U.S. and Russia give the green light as part of a peace process to end the war in Ukraine. So the drama thickens. And SpaceX launching its giant Starship rocket and notching some critical development milestones. The spacecraft deployed 8 mock Starlink satellites, relit its Raptor engine in orbit, and tested its heat shield. The rocket's Super Heavy booster made a controlled splashdown in the Gulf Coast waters while the rocket itself splashed down in the Indian Ocean. And I got to tell you, it never gets old to watch that. And a big congratulations to the SpaceX team, and yes, to Elon Musk.
Yeah, pretty epic. Pretty epic. We'll talk to Walter Isaacson later as well. That's coming up in the 8 o'clock hour. Now, NVIDIA is set to report quarterly results today after the close at 4:20. Joining us for a look ahead of the key metrics to look out for is John Belton, Gabelli Funds Portfolio Manager. It's the top holding NVIDIA is in the funds that he manages. A very good morning to you. Thanks for joining us.
Yeah, thanks for having me.
Top metric you look out for?
Revenue, always. I think we're expecting really solid numbers. Couple different dynamics under the hood, but I think this remains a supply-constrained growth story. So it's pretty amazing. If you look back at NVIDIA's numbers over the last several quarters, they've added the same exact amount of revenue each quarter. What that tells me is their revenue is basically a function of how fast the supply chain can crank out product. So I think the demand environment remains very strong. That's not the issue. The question is, how fast is the supply chain able to accommodate product?
And under the surface, then, not too bothered about the bottom line and any costs that are rising?
Well, of course, I think that if we step back, NVIDIA, where the stock is just below an all-time high, I think this earnings setup is a little bit different from the last couple of quarters. Expectations are very high. There's a lot of optimism around the stock. So I do think it's not revenue and nothing else. I think revenue is the most important KPI, and then we're going to need to see solid gross margins and earnings as well.
What about guidance and I guess the conversation on the earnings call in and around China?
There's a bit of, so there's a bit of, a question mark about what they will be assuming for China in the forward-looking outlook, because there's been a lot of moving parts.
How much of the business is it fit for you?
In the forward outlook?
Yeah.
I think they're not going to include China in the forward outlook. That's what other semiconductor peers like AMD have done. I think that is the conservative approach. I think that's the fair thing to do, given there are still uncertainties around when they're going to get some of these export licenses for the new China compliant products.
The other thing I wanted to ask about, a broader thing, which I've seen people write about in the last 6 months, is accounts receivables increasing.
Right.
What's your take on that? Is that a risk that some of their customers are a bit behind the curve, or is it in fact misleading?
I think that situation has gotten better as time has gone on. I think we're going to see that continue to have improved in the quarter that they most recently reported. If you look at their supply chain, what those partners have been talking about in the latest earnings cycle, it seems like they've just gotten their hands around how to accommodate NVIDIA's very complex set of products. And a lot of those supply chain partners have significantly increased their expectations for output of NVIDIA's product through the balance of the year. So I think supply chain bottlenecks have gotten better, and I think you'll see those dynamics improve in this quarter.
Different question as it relates to China, which I've heard from various sources that the attempt to kind of contain China by the US hasn't worked. Their innovation has been very, very strong behind NVIDIA's, but it's catching up. What risk do you put, whether it's from China or elsewhere, that a player catches up with the scale of quality that NVIDIA has, and that pricing becomes a big issue in the next 6 months or 5 years?
Yeah, I mean, I think you could probably ask a similar question about Western competitors too. Is anyone going to catch up to NVIDIA? I think NVIDIA's got a big lead, a big head start on all competition, particularly China. I think the most formidable Chinese semiconductor design competitors are still years behind NVIDIA. But to the earlier part of your question, if the US decides to clamp down and restrict China, which it doesn't seem like they're doing anymore, there are workarounds. And I think we've seen a company like Huawei develop pretty good products that aren't quite as cost performant as NVIDIA's, but in an environment where Chinese companies are restricted from getting NVIDIA, Huawei can be a decent alternative. So that's why I think the US administration is smart to allow NVIDIA to participate in China. I think we're better off if Chinese AI is built on a US company's technology.
But you feel like, I mean, that is a strategic, philosophical view. That is not a view that relates at all to U.S. taxpayers getting a VIG on those chips being sold.
Yeah, so you're talking about the revenue share that the administration has.
That's the nicer way to put it. Yeah.
Yeah.
Revenue share.
I think that's a different conversation. I think strategically, yes, it is smart for the U.S. to allow NVIDIA to play in China.
And that is good for America.
I think it is.
Okay, no, the reason I mention this is we go back and forth with Howard Lutnick, we was talking to the Treasury Secretary about this issue, which is there are times when the U.S. can do things economically that are good for the country that don't also need to capture somehow, we're not giving stuff away there's actually like a benefit to the country, even from a national security perspective in your mind.
That's what I think. Yes.
But I just add to that from the European perspective on it. This is different. So I remember 2018, 2019. I remember talking to Mike Pence about it. That the US then wanted the UK not to use Huawei
Yes.
in our 5G rollout, and the UK government bent and like it was actually a lot of cost to remove because it was already halfway down the path. The difference I think the US is also working with this time, why maybe opening up and working with China is better than containing it. If you look at the last 6 months and the way that trade policy has been announced, right or wrong, Europeans, including the Brits who are close to the US more than most, will look at it and say, well, why don't we just buy the Huawei chip? It's a lot cheaper. There's not the same resolute mindset to contain and block. And so you're contending with that as well in a way that perhaps you'd get more adherence the first time around.
I think in that market, there are viable alternatives to Huawei. In this market, there are not great alternatives to NVIDIA.
But so what portion of NVIDIA's sales is non-US though? Significant.
Yeah, I mean, it depends how you define that. I think, China is a low double-digit percentage of sales, something like that was before the
Rest of the world?
restrictions. Again, it depends. It's a little bit hard to nail it down. If you look at just the way they disclose it, it's a sizable percentage.
Yeah. John, thanks. Really, really great conversation. Those numbers come out at 4:20 p.m.
Coming up, shares of document database company MongoDB, they are soaring after reporting stronger than expected earnings. They raised full-year guidance. We're going to talk to the company's CEO about the bullish forecast next. And later this hour, conversation with Harvard University professor, author, and podcaster Arthur Brooks. We're going to touch on return to work policies, the government taking a stake in Intel, and so much more. He used to run AEI. Squawk Box coming right back after this.
beauty.com.
Welcome back. Check out shares of MongoDB this morning, up about 30% right now. The stock soaring after the document database company reported stronger than expected second quarter earnings, raised its full year outlook. Joining us now for an exclusive interview is Dev Ittycheria, MongoDB president and CEO. Thank you for being here, Dev.
That smile on his face.
They're bigger than on the photo.
Appreciation.
Wait, okay, hold on. Before we go, I just want to know, last night, you put out these numbers. Was there like any betting pool among your,
It's funny you asked,
among
there
your
was.
crew about how the market was going to react?
It's funny you ask. We have a group of people, including our CFO and a bunch of other people helping us prepare for earnings, and we do have an over/under. And I would tell you that my prediction was way under the current.
Was it like a standard deviation? Like, how many standard deviations from the normal?
Pretty close. I mean, some other people thought the stock would rip, but I've been a little guarded. So
I hope your CFO was the most guarded.
Right.
he was pretty guarded.
Okay.
Okay, so
True to form for a CFO.
let's talk about the quarter and what's creating such a huge performance this morning. What was the biggest driver of acceleration in Q2? You added 5,000 new customers, you bumped up guidance, you expanded operating margins. So a lot of good things to point to here, but kind of if we were to take a step back and talk about what was contributing to all of these tailwinds, what would it be?
So last year we decided to put more of our sales resources up market at the high. So we have almost 60,000 customers, and this span from early stage companies to the largest companies in the world. In fact, 75% of the Fortune 100 are customers of MongoDB. We decided to move more resources up market and better serve the small and medium-sized market through a self-serve channel. And that's really paying dividends. So that move, the workloads we started acquiring last year are really starting to grow meaningfully and grow faster than we had expected, which is driving Atlas's growth. Atlas grew 29% year over year. It's not that business is approaching $2 billion in revenue. There's not many cloud businesses that are growing that fast at that scale. The second thing is you mentioned customer acquisition. We've acquired 5,000 customers in the first half of the year. It's the most customers we've ever acquired in the history of the company. And we think that that's a good sign of future growth because a lot of these companies are AI native companies who are coming to MongoDB to run their business.
Who are you taking share from?
It's a good question. This is a big market, and so there's not a winner-take-all market. So even in our largest companies where people are spending 7-8 figures with us, there's still tons of other technologies that customers are using. I just met with 2 financial services leaders yesterday before earnings, and they're very happy with MongoDB, but they have a bunch of other stuff. This market's roughly a $100 billion market, and we technically have 2% share. If you get 5% share, we're a $5 billion revenue company. So the opportunity in front of us is massive.
So AI, you mentioned AI native companies were a big composition of the customers that you added here. Can you give us a sense of the pipeline? And I ask this in the context of over the last week or two, we've seen kind of this reckoning, some questions around AI spending. Sam Altman saying investors as a whole are overexcited about AI. Does your pipeline reflect some of those concerns about overspending? Or is it the opposite?
So it's interesting you asked that question. So for the last 2 years, I've always said people tend to overestimate the impact of a technology in the short term and underestimate the long term. And a lot of the investors thought I was being very bearish and maybe I was more signaling about the problems in our own business versus what's happening in the market. And it's actually playing out. Enterprise adoption of AI is still quite tepid. It's all about end user productivity, code generation tools, business users using document summarization, chatbots, data extraction. But when you ask a CIO or senior technology leaders, is AI fundamentally transforming your business? The short answer is no. Now, it will get there, but people are moving very cautiously. One, they want to guarantee the reliability. This thing called hallucinations, people are very nervous about, especially a financial services customer or healthcare customer. 2, they want to ensure security. They want to make sure these systems are highly secure. And 3, they want to make sure it's also cost effective because there's the ROI there in terms of focusing on automating certain tasks. Now, people are starting to be a little bit more aggressive. We're starting to see deployments of agents to automate back office, maybe automate sales and marketing, but it's still not yet kind of full force in the enterprise. And I think it's going to take time just as people get more comfortable with technology. Change management is not easy in large enterprises, and people want to see some wins before they deploy more investments in AI.
Can I ask a big picture question about how you deliver these services to your customers? Obviously, there's been a huge shift over the last decade, but particularly the last few years in everything being done remotely in the cloud, all the compute power coming from those data centers. I'm sure for smaller customers that will continue, but some of your biggest customers, is there going to be, or is there already a shift where you'll put the compute power locally either for speed of delivery or for data protection aspects. I just wonder whether that's a growing trend you expect, and I'm asking it more for whether there's been an overbuild of data centers or not, and kind of if those trends are developing.
Well, I would say 5 years ago, everyone thought every workload was going to go to the cloud. Now, especially large enterprises are much more nuanced in that perspective. They say, I'm going to run some workloads in the cloud, I'm going to run some workloads on-prem. And actually, we have offerings for both. So since the company started, in fact, Andrew may remember when I took the company public and Andrew interviewed me, our cloud business was 2% of revenue. Now it's 74% of revenue. So it's obviously grown meaningfully.
Will it go back down again or not?
No, I think the cloud will continue to grow quite healthily, but we still have lots of customers who want to deploy in their own data centers, want to manage their own infrastructure, because with certain workloads they feel that it's the right thing to self-manage. So this, whereas smaller companies, they want to put everything in the cloud. They're not in the business of day-to-day management.
And maybe this goes back to where Leslie was going, but how concerned are you about some of the smaller AI companies that have no cash flow right now that I assume are coming onto your platform today, hoping to make it?
Yes.
And whether they will make it, I mean, in the future?
Yes. So the good news is our growth was not driven by some outlier AI companies. It was core business that really drove the growth. But what you're really saying is that there's lots of companies who have been well-funded and basically spending money like drunken sailors, if I can use that expression. And the question is, how durable is their revenue growth? Like, you have code gen companies who are literally now in the hundreds of millions of dollars and growing incredibly fast. You have other companies who are also growing really fast, but they're sometimes gross margin negative, and obviously they're losing a lot of cash. So the bet is that they can get enough brand and enough users that as the cost of tokens comes down, their business essentially becomes more profitable. Kind of like the Uber model. Uber lost money for years, and then they slowly raised prices, and now they're generating a ton of cash. That's a bet. I think there's a lot of companies who have not really nailed product market fit, and I think there will be a shakeout. I think we are in I wouldn't call it the trough of disillusionment, but there is clearly a betting going on, and now you're starting to see the separation between the haves and have-nots in a lot of different spaces. The nice thing for us is we're a horizontal infrastructure player, so we're not dogmatic about just only supporting one type of companies. We have small companies, medium-sized companies, and large companies who use our platform.
Yeah, and the AI infrastructure stack and where you fit all plays a role here too. Thank you very much, Dev.
It's great to be here. Thank you for having me.
Congratulations.
Thank you.
Keep that smile on your face.
I will
now,
try.
now you got higher comps though. So it just gets,
Yes.
It just gets harder and harder.
The treadmill only runs faster.
Right. Coming up on the other side of this, Morning Movers, Dom Chun is going to give us a rundown of some stocks to watch as we head to a break. Here's today's Affleck trivia question. Where was the first commercially successful oil well drilled in the United States? You can ponder that as we go to break. We will be back with the answer after this.
Morgan Stanley.
Welcome back to Squawk Box. We have the answer to today's AFLA trivia question. Did you get it right? Here it was. Where was the first commercially successful oil well drilled in the United States? The answer, Titusville, Pennsylvania, 1859, folks. I think a lot of folks thought it might be in Texas.
Oklahoma.
Not the case
I wonder how much work commercially is doing that.
these days.
And how do we define commercially successful? Because maybe we were also slightly right. Anyway.
We're going to get to Dom Chu with a look at this morning's pre-market movers. Dom.
All right, good morning, Andrew. Good morning, Wilfred. Good morning, Leslie. We're going to start here with a check on shares of Okta, which are up by just about maybe 4%, 4.5% at this point, after it reported better than expected quarterly results. The identity security company also raised its guidance for the year as it sees significant growth in its subscription backlog. So those shares up 4.5%. Now, for more on the quarter, be sure to tune into Money Movers at 11 a.m. Eastern Time today for an interview with CEO Todd McKinnon over at Okta. Now let's check on shares of PVH, which are up by about 7% right now after the Tommy Hilfiger and Calvin Klein parent company reported a beat on earnings and revenues. Trade uncertainty is still a headwind, though, for the retailer. It now expects tariff costs of $70 million for this year. That's up from the previous forecast of roughly $65 million. So those shares up on nearly 7%. Next up, you got shares of Eli Lilly, which are higher by almost 1% following an upgrade to hold from reduce over at HSBC. That came after the pharma giant's daily weight loss pill cleared another late-stage trial. The firm also raised its target price on the stock to $700 from $675. That's an implied upside, by the way, or downside rather, of roughly 5% from where the stock was trading now. So Eli Lilly shares just up about 1%. And we're going to finish with shares of Krispy Kreme lower by 7% on a downgrade to underweight from neutral over at JP Morgan. Analysts there say the chain took a big profit hit from its now canceled partnership with McDonald's, and they're not sold on its proposed turnaround plan. So those shares taking a hit to the tune of nearly 9%. For more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers, as always, can get all the access to detail and analysis behind those big upgrades and downgrades, Andrew. So Krispy Kreme, DNUT, down 9%. I'll send things back over to you guys.
Dom, thank you for that.
So to come here on Squawk Box, more on the government's recent move to take a stake in Intel and its potential interest in other companies. We'll be joined by best-selling author Walter Isaacson. That's coming up next hour here on Squawk Box.
Welcome back. Shares of Kohl's are sharply higher this morning, up 18.25%. Earnings coming in at 56 cents a share, much better than estimates of 29 cents a share. Revenue fell 5% to $3.36 billion. That was in line with expectations. Comparable sales fell 4.2%, but that was actually better than the 5.1% decline the street had expected. Kohl's is also raising earnings guidance for the full year to the range of 50 cents and 80 cents per share versus estimates of 44 cents. Shares of J.M. Smucker are lower this morning. Earnings coming in at $1.90 per share, 3 cents below estimates. Revenue of $2.1 billion was roughly in line with expectations. J.M. Smucker expects earnings in the current quarter to fall 25%, but is affirming its profit guidance for the full year. Those shares down about 4.9% at this hour.
Coming up, we are going to get into corporate culture, returns to office policies, the state of capitalism, and so much more with Harvard professor Arthur Brooks, someone who's always trying to teach us about happiness. A good friend of the show will be with us right after this.
Now.
The fact that people spent as much time on it for as many days as they did was probably a little bit of a surprise to me. I don't know why that is. I'm not an industrial psychologist nor a psychologist, so maybe I struck a chord in some regards. But most importantly for me, I think the memo was very well understood within the business. There's been the right kind of dialogue around it. I can't say everybody's happy about it, but I think the vast majority of AT&T employees understand the direction we're headed, and that's a really good thing.
That was AT&T CEO John Stankey on Squawk Box yesterday. He responded to his now viral memo to employees on corporate culture. His August 1st message was a tough response to employee feedback about the company's 5-day return to office mandate. Our next guest is going to weigh in on return to work, plus the U.S. government's stake in Intel and so many other things. Happiness has a new book out. We got to talk about it. Harvard University professor Arthur Brooks, columnist for The Atlantic. We had a whole laundry list. AEI President Emeritus, new host of the podcast Office Hours with Arthur Brooks. And as I mentioned earlier, the new book, The Happiness Files, Insights on Work and Life. It is now a New York Times bestseller. So congratulations.
Thank you very much.
To you. Pretty cool.
Yeah, that's great.
All of those things are pretty cool. How do you know what you do about your office? Which one do you go to, given all of the things you're doing?
It's great. It's actually, people want to be happier. Who knew? It's big news.
How important is it for employees to be happy? And I asked that in the context of John Stankey writing a pretty tough love memo to his staff. Some people love a tough love memo. Other people, freak
He's
out.
a very straightforward guy. I know John Stankey. He's a great CEO. It's a terrific company. And it's when somebody's straightforward in a period of double talk. I mean, CEOs have gotten really good at not saying what they actually think or trying to shade the truth when they're talking to their own employees. And a lot of CEOs have become afraid of their employees, as a matter of fact. They get blown up in the Slack channel. They don't know what to do. Something might get leaked. John Stankey doesn't care. He's running a great company, and he wants to be honest with everybody.
Can you just explain this? I just want to go back. I don't want to relitigate the past, but a little bit.
Yeah.
Why do you think it was, I would say 2018, 19, into the pandemic, which is its own world?
Yeah.
Why CEOs felt that they were being held hostage by the employees, and today they don't? And the reason I ask is I think there was a view that maybe the job market was so tight. You remember people would say, job market's so tight that we can't afford to let these people leave, and so we need to make their life as cushy as humanly possible.
Right.
Today, by the way, job market seems just as tight, and people are saying, talk to the hand.
Yeah, it really has to do with the culture of activism. So activism tends to rise. Every 50 years or so, you get a real activist culture. It was the early 1970s, 2020, thereabouts. And what we saw on college campuses, this is where I make my living, is on college campuses. Activism became more important than inquiry, which is what ruined the university climate. There's nothing wrong with activism per se, but when it gets to great inside organizations, then a small group of people, usually 3 to 5% of people, can bully the leadership. Effectively, that's what happened at universities, where 3 to 5% that did not represent the community and were just blowing people up, that people became afraid of them. And that activist culture was really well organized inside companies, universities, the media, every place else you want to look, and now people are figuring out how to fight back.
But work from home captured more than 3 to 5%.
No, for sure. But the whole point is that the activists about that had disproportionate power, is the way that works, or on any particular topic. You can in the Slack channel inside a company, 3 to 5% figured out how to look like 50%, and then sooner or later leadership caught on. And this is the case. This is what we're seeing in companies and universities, and now the backlash against the activism is what we're seeing, and I think it's welcome. I'm really happy to see it.
Are employees long-term more happy when they work in an office because they have the camaraderie, their career develops more? Short-term unhappy to be in the office, long-term happy, or is it
There's
just...
a lot of research on that, and it's actually quite conflicted as the way that works. But the bottom line is that people are happier when they're with other people if the environment is such that they can actually make friends. So one of the things that we find in the research really clearly is that the happiest companies, which is to say highest morale among employees, they actually make the most money. But one of the best things that you can do is to create a climate of friendship inside, and that means not being buddies with the boss. That means getting out of the way so they can be friends with each other. You're not friends with people on Zoom. You're just not.
How does the ubiquity of AI ultimately change that dynamic? And I ask that because, as AI agents become, more ubiquitous throughout the workforce, and as people are using these tools more, I've heard a lot about, you're just going to be a lot more productive in the workplace. Maybe you only work a 4-day week.
Right.
Maybe. How do you see it changing the dynamic of the relationship between employee and employer?
I don't actually see a lot of happiness gains coming in general from the way that we're using AI. And part of the reason is because AI is new. And when we use new technology, brand new, technology that seismically changes the way that we interact with each other. The big problem is that it starts by substituting for human relationships. So you see that where AI is working right now with respect to, I don't know, dating apps, social media, the way that we're actually working, it's crowding out actual human relationships. Here's the deal with tech in general and happiness. Here's the rule. If tech substitutes for actual human relationships, it's bad for happiness. If it complements human relationships, it's actually good for happiness. So, for example, let's take a parallel case. Dating apps, for example, clearly they're making relationships harder for a lot of people. Most people say they don't like actually how it helps them to meet people. People are really dissatisfied with it, but new dating apps are trying to figure out a way where it will complement the relationships as opposed to substituting the complex environment of meeting people and falling in love. That's the way all technology is supposed to mature, and AI is going to have to do it that way so it doesn't actually hurt us in terms of what we care about, which is love and happiness.
Arthur, I want to pivot the conversation. I want you to put your former AEI hat on.
Okay.
And I want to talk about
It's still my hat.
I want to talk about capitalism in America today. Free markets, something you've come on this broadcast many times and advocated. Okay, well, you may love them, but I think it's shifting, at least what's happening in this country. So weigh in on the idea that the United States government has now taken a stake in Intel, is charging a VIG to NVIDIA and AMD to export their chips to China, even though originally they didn't want them to, for national security purposes and everything else. Golden shares, and the idea more broadly that the president says that he would prefer or would like to actually buy into more companies. What say you?
I hate industrial policy.
You do?
I hate it. I mean, I don't like it. I think it's bad for free markets, it's bad for growth, and it's bad for freedom in general. Now, I understand that it's always existed. It would be naive of me to say that this is a new thing. On the contrary, the Biden administration was unbelievably aggressive in industrial policy. The weird thing is that, most people associate Republicans with going the other direction, and the Republicans kind of aren't. But the truth is that we have this big wave of greater industrial policy that's encroaching on American capitalism, and I don't like it. I think it's
So why do you think we're not hearing from AEI? We're not hearing from the Chamber of Commerce. We're not hearing from the Business Roundtable. We're not hearing from business leaders screaming from the rooftops saying, this is cuckoo for Cocoa Puffs, if in fact that's what you believe.
Well, I can't speak for the Chamber of Commerce. I certainly can't, but I see scholars every day from the American Enterprise Institute who are talking about it. The problem is that the counter argument doesn't get as much weight right now. What really gets the weight, what the media is focusing on, is sort of an audacious move by the Republican administration to weigh more heavily into industrial policy than they've done in the past.
Okay, then we're Republican congressmen or Republican senators that historically supported these positions that you have.
This is a problem with the way that conservative politics is moving today. This is a problem with the Republican Party today. Now, this is out of the equilibrium. I have faith that we're actually going to come back to our free market roots.
You do?
I think so. And
you don't think this is generational? Because I'm of the view that this could be decades. Meaning, if you don't like tariffs, these tariffs are likely to be here for decades. In part because once you put them on, they become part of the budget. It's very hard to say, hey, we're making $200-300 billion a year, and the next president comes in, whoever that is, and says, I don't like tariffs, we're not doing that anymore. Then all of a sudden you have a $200-300 billion hole to fill.
Yeah, I think you're right that these things do tend to be pretty sticky, but I think that the ideology is going to move away from that because the status quo among American conservatives tends to be more toward economic freedom.
Right.
That's the general way that they think, and I think they will get back into that groove at some point. The sooner the better.
The other thing that's so interesting is just the flip in terms of the way Republicans think about power and the way Democrats think about power. It used to be that Republicans thought the Democrats were trying to do too much.
Right.
And now it's almost the opposite. We've been having this big conversation about the independence of the Federal Reserve, for example, and what's going on with Lisa Cook and all of these things. And it's almost like a complete reversal of the sort of normal.
Yeah, because whoever's in power, the other side actually takes the opposite position because that's how you can get a dig at whoever actually happens to be in the White House at this point. The Republicans have a lot of power. They have the Senate, they have the House. Arguably, they have greater power in the Supreme Court with their agenda, at least, and the White House, obviously. And so the result of that is a kind of a clean sweep. The table's been run, and so the result is that Democrats.
As a happiness guy, are you happy about that?
It's politics, Andrew. I mean, it's like this is politics, and the truth is, politics never raises happiness. Anytime a politician says, I'm going to make you happy, you should be very, very nervous.
I was about to ask that. We always say people vote, particularly in America, vote with their wallet.
Yeah.
Do they vote with their happiness ever?
Oh yeah, all the time. This is actually how they form their families. This is how they make their decisions ultimately. The reason they're voting with their wallets is because it's downstream from their happiness. They think they're going to be able to support their families better. They're going to have more security.
Is the nation happier now?
The nation is not. The nation has actually been in a happiness decline since 1990. This goes way back. That's the climate of happiness. And the reason for that is that there's 4 practices that the happiest people follow. They practice their faith or a life philosophy if they're not religious. They have a family life. They have friends, real friends. And they actually feel like they serve other people through their work, and all 4 of those things have been in decline. Then there's the big storms in happiness, like the coronavirus epidemic that John Stankey is trying to help his company finally come back from. We talked about that earlier. There's the reaction to the financial crisis, plus all of the way that people have reacted to the new media and the new technology in 2008, 2009, 2010, when everybody got screens in their pockets and social media apps. And of course, there's the polarization, the political polarization. All these things have been horrible for happiness. And a lot of that is related to politics. If you want to be happier, pay less attention to politics. That's the bottom line. Look at it for 15 minutes in the morning. I recommend Squawk Box, not politics.
Love you. And we recommend Office Hours, the new podcast, and the book, The Happiness Files. Thank you, Arthur.
Thank you.
It's great to see you.
You too.
Appreciate it.
Coming up, we have an exclusive interview with New York Fed President John Williams. That's at 8:30 a.m. Eastern Time. Squawk Box returns in just a moment.
mykitsch.com.
Welcome back. Shares of Abercrombie and Fitch have been moving after quarterly results. Earnings of $2.32 per share came in 2 cents better than estimates. Revenue of $1.2 billion was in line with expectations. Same-store sales rose 3%. That was in line with forecasts. It's just down, a 1/3% in the pre-market. Store sales fell 11%, while Hollister sales surged 19% for the full year. The company is narrowing earnings guidance while raising its revenue outlook. Still to come, the battle between the White House and the Fed. President Trump wants Fed Governor Lisa Cook fired. The central bank says it will abide by any court decision. Cook has vowed not to quit. We'll be talking to the former Assistant Attorney General, Jonathan Cantor, to get his views on what might happen next. Sources telling CNBC that Fed Governor Lisa Cook could file a lawsuit to overturn her firing by the president as soon as today in a federal court in D.C. Well, joining us to discuss, former Assistant Attorney General Jonathan Cantor. He's a CNBC contributor, of course, a distinguished law professor at Washington University in St. Louis. A very good morning to you, Jonathan. What's your snapshot of what's happened so far? This is now up to her to fight back or the other way around?
It's up to her to fight back. So the president's been itching for a fight to determine how much control he has over the Fed. And now he's going to get it. She's going to file a lawsuit today. That lawsuit is almost certainly going to seek a restraining order from removing her from the Fed because they will argue that the president has not satisfied the statutory requirement to demonstrate sufficient cause to remove her from office.
And when we say they, that's her and her attorney, or it's the Fed?
No, it's her and her attorney.
And what are the implications on the Fed currently in terms of what they do or don't have to enforce?
Well, we're going to hopefully get quick word from the court whether there will be a temporary restraining order. My expectation is that the court will issue a temporary restraining order saying that she cannot be removed until the proceeding has been resolved. That is certainly what she's going to request in her legal filing. And if she gets that, then everything will be held in place. She'll be able to continue to show up at her office, and the Fed will have to abide by that court order.
Jonathan, it's Leslie Picker here. If she is able to get that restraining order from removing her from her Fed position, what are the implications given the reports that President Trump is already lining up potential replacements for her, whether it's Stephen Myron or David Malpass. How would all of that work out in the context of that restraining order in the court?
Well, it's certainly going to take some time to name a replacement, even if the president succeeds in removing Governor Cook. So the way the process will work is it will get ironed out in the courts through hearings and appeals, and that's likely to take at a minimum a few weeks to determine whether she can be removed. So that process is likely to take place. He won't be able to nominate somebody and appoint somebody, though, until the seat is vacated.
Jonathan, I have two questions. One, and we raised it yesterday, is there any chance that if the Fed doesn't do anything, and their statement is basically said we're going to leave this up to the courts, but is there any chance that if the Fed doesn't turn off her pass or stop sending her, checks effectively for the work, that the president could try to turn around and say that the Fed chair should be fired for cause?
I think, in the before times, I would have said that's unlikely. I think in the current environment, anything is possible. I'm glad that she's going to file a lawsuit, not because I like litigation, although as a lawyer, it's always fun to watch, but because I think we need clarity from the courts here. And so if the court issues a restraining order, then the Fed will be justified in saying it is abiding by the restraining order, and the administration should also abide by that restraining order. So getting the courts involved here, I think, will give us a referee, so we have rules of the road to avoid these kinds of conflicts that might result in unprecedented constitutional crisis.
Jonathan, do you think it's been a mistake that Lisa Cook has not come out to the extent that if she believes she is not guilty of what's been alleged against her, to come out vociferously and say, look, here's what happened. There's an exception. I was allowed to do this, or a mistake was made and was signed by somebody, or I was advised incorrect, or whatever the defense is. If there is a defense, whether she should be out there publicly making that case.
I'm of two minds here. So on one hand, I really wish she would. I think it would give folks a lot of clarity to understand whether there is a there. On the other hand, as a former prosecutor, I'm mindful of the fact that we're not just talking about damage to her reputation. The referral is for a criminal investigation, which can result in going to prison. And so it is not surprising to me in that sense that she's being extremely buttoned up, retaining counsel, and then being methodical about what information to release and when. I do anticipate, however, that the filing today in court will have some information indicating what her explanation is likely to be in a proceeding.
Jonathan, final kind of big picture question, because it might have implications for other members going forward or different roles going forward. What's your interpretation of what qualifies as cause?
So cause, I think traditionally has been understood to be malfeasance, neglect with respect to executing your duties in the job. I think the president believes cause should be, frankly, because he wants to. And I think that's the fight we're going to have here. I think most legal scholars and legal experts will tell you that it really is supposed to relate to her duties. Here, the conduct predated her time in office, and it doesn't relate to her duties. Now, if she were convicted of a crime and fraud after a thorough investigation, grand jury, and a trial, then perhaps there might be a basis to remove her. But in the interim, cause really is supposed to be about not doing your job well or exercising poor judgment, malfeasance, neglect, something really extreme.
Jonathan, thanks so much. Great conversation.
You bet.
It is 8 a.m. on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Leslie Picker and Wilfred Frost, in for Becky and Joe. Among today's top stories, the U.S. imposing an additional 25% tariff on Indian goods today, doubling the rate to 50% on items like garments, jewelry, furniture, and chemicals. That move tied to India's purchases of Russian oil. And shares of Okta, they're higher after reported better than expected second quarter results. The identity security company also raising its guidance for the year as it sees significant growth in its subscription backlog. Okta's CEO will be on Money Movers. It's all mad. It's all mad, and it's a lot of money right here today, 11 a.m. Eastern Time on this very network. And we're watching shares of Canada Goose this morning. Shares jumping in the pre-market after sources telling CNBC that Bain Capital has received bids to take the company private, with Goldman Sachs advising on a potential sale. Bain had owned Canada Goose before.
Right.
And so it may be making a little bit of a round trip, if you will. I felt like I was early. I had a Canada Goose coat when it was cool, then it got sort of overdone, and I don't know what's going on.
And
Trendsetter.
Yeah.
Well, maybe, but I'm still wearing it, which may be the problem. A follow-up on the sale of Spectrum licenses. Yesterday, AT&T announced that it was buying some licenses from EchoStar for $23 billion to expand its 5G and wireless home internet coverage. Now, Semaphore reporting that T-Mobile and Elon Musk's Starlink have separately expressed interest in acquiring some or all of EchoStar's licenses that AT&T didn't buy. EchoStar chairman Charlie Ergen has been under pressure by the FCC to find a buyer for its underused bandwidth. So you're looking at EchoStar shares up again on the back of that news, and boy, has it made its own trip recently.
Yeah, well, there was reports that it was going to consider bankruptcy to keep those licenses. So this is definitely an about face for that. Let's take a look at the futures at this hour. Not too much movement. The Dow implied to open about 16 points higher. The NASDAQ looking to open about 21 points higher. The S&P right around the flat line today. For more on the markets, let's get to Mike Santoli at the New York Stock Exchange. Good morning, Mike.
Morning, Leslie. Yeah, S&P 500 pretty much holding near record highs, closed yesterday just below the prior record high, and really kind of holding also to the conclusion that the market drew out of Friday's Jackson Hole speech from Fed Powell. We may be more likely to get a September rate cut in an economy that's still holding up. You see a lot of the data, including durable goods this week, looking okay. So you see we're hanging at this up 10% level on a year-to-date basis for the S&P 500. I would just flag, we didn't really have too much of a reset in the somewhat seasonally weak portion of August. You had barely 2% down, so I'm not sure that we sort of cleansed the market or really relieved any of the extremes. However, market continues to do well. Very broad rally on Friday, kind of insulates the bull case for a while. Presumably, we'd be susceptible to some stagflationary data if we were to get it. We'll see if that does come through. Now, take a look here. Obviously, waiting for NVIDIA after the close. It's 8% of the S&P 500. The implied move maybe is still 6%. So it can swing the index almost no matter what happens. Thought it was interesting, though, on a one-year basis, it's basically tracking and actually slightly underperforming the K-Web. So NVIDIA has added $2 trillion in market cap since the lows in April, but it's still kind of in sync with one of the best markets in the world, which so far this year has been the Chinese equity market. Finally, in the bond market, 10-year Treasury yield really continues not to send much of a signal. It's been range-bound for a while. Now, the signal maybe is that it's holding around these yields when short-term yields have been collapsing. So steepening the yield curve, we're expecting more Fed rate cuts at the same time as longer-term yields kind of hang in there. I would point out there's this little bit of a kind of a triangle, sort of indecision type pattern there where we kind of funneled in toward this level around 4.25. We'll see if it finds an excuse to break one way or the other. We'll say the lower volatility in the bond market has been one of the factors that's enabled mortgage rates to come in a little bit. 30-year fixed rate mortgage spread to 10-year has actually narrowed. That's probably net good news. Not sure if it can make all the difference for the housing market, guys.
What do you think it means for small caps, Mike? Because I believe it's what 40-50% have floating rate debt. Are you surprised that stability hasn't been more of a boon, I guess, Friday aside?
Yeah, I think, well, Friday aside, yesterday small caps outperformed again, so it does feel as if that relationship is intact, which is to say, if we think we're going to get more Fed rate cuts, then it will, kind of be net positive for small caps. I have to say, the Russell 2000, if you just look at the largest holdings and the ones that move the most, they're quasi-meme stocks, and they're kind of these speculative story situations. So yes, obviously the core economy matters to small caps, and they have floating rate debt, and a lot of those old line companies really do benefit if we get Fed rate cuts. I just don't know if that's what in real time is always moving the Russell 2000 in particular. So it's sort of a mixed picture.
Yeah, that's a good point about the meme stocks, especially over the last few months or so. Mike, thank you.
Okay, coming up next, from XAI suing OpenAI to industrial policy, we're going to cover it all with Perella Weinberg, advisory partner, and the one and only author Walter Isaacson. And then New York Fed President John Williams joins Steve Leisman for a wide-ranging interview on rates, President's plan to announce a nominee to replace Lisa Cook, and so much more. You do not want to miss that conversation. That's at 8:30 a.m. Eastern Time. Big show, big hour ahead.
Number 18.
White House economic advisor Kevin Hassett telling us that the government's stake in Intel is like a down payment on a sovereign wealth fund. And on our air yesterday, Commerce Secretary Howard Lutnick referred to a national economic security fund. Joining us right now is CNBC contributor Walter Isaacson, the legendary Walter Isaacson. He's a professor at Tulane University, also Perella Weinberg advisory partner and great friend of the show. Walter, thank you for joining us this morning. We've all been trying to make sense of what we've learned even in the past week as it relates to this Intel investment, but maybe even more so the idea that the president is saying quite openly he's hoping to do this again and again. What do you make of that?
I mean, I think state capitalism is always a bad idea, whether it's the way you do it in China or you do it in other places. You don't want the federal government to be controlling major corporations, and for that matter, to be competing against other corporations. If they have a stake in Intel, what does that mean for competition? We've always resisted that. There's a tradition that goes back, I don't know, 400 or 500 years where, King Louis XIV has Jean-Baptiste Colbert doing this mercantile system and making companies be partly owned by the state with their gilded palaces. That's the type of thing we've always tried to avoid in America.
So the question is, if you're right, why do you think we have not heard, and we talked about it earlier with Arthur Brooks, we haven't heard from the Chamber of Commerce or the Business Roundtable or business leaders or traditional conservatives that are either senators or congressmen or governors or whatnot on this issue who I think probably agree with you, but haven't said so aloud.
Well, first of all, you've heard from things like the Wall Street Journal's editorial page, which is very much, aligned with free markets, free trade, free ideas, being totally against this. You're asking a larger question, which is why do not senators and mainstream Republicans feel like standing up to Trump, and that's up and down the board on these things. Certainly creating a type of crony-ish capitalism where some are favored and some aren't goes against the grain of most Republican thinking for 50 years.
And so when you sort of think through the permutations of this, if you and I were having this conversation 5 years, 10 years from now, what do you think it looks like?
Well, imagine, do the thought experiment, because every now and then people on your show sometimes say, what aboutism? What about when Obama, Solyndra, or Joe Biden did whatever? Imagine the thought experiment of a Democratic president deciding to do similar things and to take stakes in companies and tell those companies, how to do their logos, how to put sugar in their, their Coca-Cola formulas, how to fire a CEO. I think we'd be outraged. So if 20 years from now this is happening with both parties, we've gone down a really bad path here. I mean, we need competition. We need antitrust enforcement. We don't need the government favoring certain companies.
Walter, I wanted to ask you about Musk v. Altman, the lawsuit. Now, my first thought, I have to say, with two very deep-pocketed individuals, is that the clear winner will be the attorneys on either side and the fees that are going to be racked up on this. Is there some legitimacy on what both sides are saying?
Absolutely. Yeah, absolutely. What you have is partly a personal thing. In my book, I have a couple of chapters on Elon Musk and Sam Altman creating OpenAI to be open, to be in the public interest. And then they have a huge fight where Musk wants to take over the company. So, it's like Musk versus Zuckerberg, Musk versus many other people. It's partly personal. But there's a deeper thing. And once again, it's historical, and it goes back to the Sherman Antitrust Act, to US v. Standard Oil, and then all the way to US v. Microsoft and Apple, which is if you have dominance in an industry. And there's a question that hasn't been totally resolved, is whether Apple is either a monopoly in the iOS-type smartphone industry or has dominance. But whatever it is, you cannot, by law, use dominance like that to either protect your dominance, in other words, to say, in my app store, I'm going to favor people who pay me money. That's what happened when Google tried to pay Apple, in order to be the search engine, the default search engine. The government shut that down. So there's real legitimacy here, which is, does Apple, with its app store, extract too much rent from people in the store? Epic Games was suing on that. And likewise, is it being unfair to competitors? Because Apple has a relationship with OpenAI. So does Microsoft. You want to have multiple players in the AI field. But if Microsoft and Apple decide they're going to favor OpenAI, it cuts down on competition, and it hurts, of course, Elon Musk's Grok XAI.
Is it fair to say that X favors Grok, but perhaps X isn't as influential or dominant?
Absolutely. Yes, X, formerly Twitter, favors Grok, but X is not a dominant or monopoly position by any means. And so you're allowed to do that, except if you're protecting a monopoly in the field. X does not, or X Twitter does not have a monopoly in the field of social media. Part of the case here is, does Apple have dominance or monopoly? Something that various courts haven't quite settled yet. But there's a big difference between a company that has a small percentage of a market favoring itself. The bigger question on this, in my mind, which really strikes me, is Google, which has real dominance in the search engine market. Now when I search on Google, it gives me Gemini results. Is that tying or bundling like John D. Rockefeller was forbidden to do in, way back in the 1920s with USV Standard Oil? I think it is. I don't think that Google should be allowed to bundle Gemini search the way it does and hurt other, not only search engines, but CNBC, where it doesn't send you to the CNBC website, it gives you its AI result.
Hey, Walter, I wanted to ask a different question. As somebody who has studied American history, we are in this very unusual moment as it relates to the Federal Reserve and Lisa Cook and this situation, and it's clearly going to go to the courts. And I'm curious about what you think of the independence of the Fed, how independent you think the Fed should be, can be, will be, and are you surprised that the market, people have been saying for months that, Fed independence is so important, and if it's not independent, the markets will react and they will be the governors on this, and yet they haven't.
Right. I mean, Greg Ip writes about it today in the Wall Street Journal, which is why haven't the markets reacted more? I personally am in favor of an independent Fed. I don't want Democratic presidents or Republican presidents for political reasons to say, okay, let's flood the money supply or let's lower interest rates. But more important, in my opinion, is it's been the opinion of Congress, the opinion of the courts for more than 50 years. Having an independent Fed that helps set money supply, inflation targets, and interest rates is by law the way things are. And you saw the Supreme Court, which gave the Trump administration a lot of power to fire people on independent agencies. But in their decision, they carve out the Federal Reserve for very good reason.
Taken all together, Walter, I'm curious, because one of the big reasons why the stock market surged after the administration won back in November was on this notion that we would see sweeping deregulation. And I'm just curious, as you think about what's happening, whether it's tariffs or the potential to take stakes in multiple companies, or a golden share in the U.S. Steel deal, what's happening at the Federal Reserve, would you altogether consider this administration to be following in that deregulatory notion, net, given what we've seen with some of these unprecedented actions?
No, not really, of course. I mean, there's some things I favor. I think putting your thumb on the scale on trade is probably a pretty good idea in terms of consistent, modest tariffs. But I was just at a group here in New Orleans that's basically Cato Institute, more libertarian, and they, of course, are appalled by all these various interventions, and you haven't had a real deregulatory push as much as you've had a meddling in the economy by the federal government.
Walter, I had a different question, which is, a successful test flight for SpaceX last night. I wonder the extent to which you think that there is correlation. There's a broader question in this, which you'll see what I'm getting at, with Elon no longer being involved in politics or less involved with politics. Is there a direct cause and correlation with things being more successful in his businesses on the other side, or not?
Well, there's a correlation. It's not an exact correlation, but he's focused like a laser on not only getting Starship up, getting the Raptor engine simplified, but actually getting Starship to grow bigger. When he sits down there in Boca Chica, Texas, and is part of this huge new factory they have there to design Raptors, he is very good at material engineering and at building rockets. And I personally think it was his detour into government was not the smartest idea in the world. Certainly did not help SpaceX. Question on Tesla is he's so focused on autonomy and full self-driving that bet may pay off, but he hasn't focused on doing the cheap and expensive car, which I think Ford Motor Company will now try to do, this $25,000 to $30,000 car.
Hey, Walter, before you go, I just want to bring it full circle to the beginning. We talked about Intel and the idea, though, that this administration may try to look to buy pieces of other businesses. One of the things that we heard from Howard Lutnick was defense businesses, or just basically any business that relies in large part on the U.S. government. I was inspired to ask you the question because we were just talking about SpaceX, and there was some news out recently that 80% of their business comes from the U.S. government. Howard Lutnick mentioned Lockheed Martin. You could go down the road of Booz Allen, which has a huge, government is a huge business. By the way, there's probably things that are not even defense. They're probably contractors who build stuff. There may be even food services businesses where, a large majority of the business is, serving food to government workers and the like. Do you imagine that the U.S. government will go that direction?
Well, I'm not going to sit here predicting where Howard Lutnick and Donald Trump are going to go, but I would say what you want is to avoid what you have in the defense industry, which is cost-plus contracts without much competition. The big difference between, say, Boeing and some of the contracts it has with NASA and the Defense Department versus SpaceX is some of these old line defense contractors are under cost plus contracting. It means it gives them incentives to spend more and take more time. I think we should go to fixed price contracts the way SpaceX is told, hey, you get these 10 satellites in orbit, we pay you this amount of money. That's the way to do it and promote competition among various contractors instead of having favored government contractors, which I think is made worse if you start taking a stake in Lockheed Martin. You start taking a stake in Boeing, then we're really down a bad path.
Walter Isaacson, thank you for joining us this morning. Great to see you.
Good to see you again.
Thank you.
Up next, we mentioned it just there, SpaceX nailing a critical 10th test flight. Details on that after the break. And then coming out, New York Fed President John Williams talks to Steve Leisman about the Fed's rate path ahead and some of the key data points due in the next few days. Of course, tomorrow it's jobless claims and then GDP data as well. On Friday, the Fed's preferred inflation gauge, PCE, will be out as well as personal income and July advanced economic indicators. Scorebacks back after this.
stocks.
Welcome back to Score. Let's have a look at the futures right now. As you can see, pointing higher just slightly by about 30 points on the Dow. Nasdaq, S&P both up 0.1%. Pretty small moves there. Check in on crypto prices right now. Of course, Bitcoin was pulling back over the last couple of days from its recent highs, up 0.2 today. Solana's getting the biggest big of the names there. Ethereum's around 4,000 and 4,600, and Bitcoin at about 111,000 right now.
SpaceX launching its giant Starship rocket and notching some critical developmental milestones. The spacecraft deployed 8 mock Starlink satellites, relit its Raptor engine in orbit, and tested its heat shield. The rocket's super heavy booster made a controlled splashdown in Gulf Coast waters, while the rocket itself splashed down in the Indian Ocean. And shares of MongoDB surging after the company beat Q2 earnings and revenue expectations, raised full-year guidance, grew revenue 24% year over year, and added nearly 3,000 customers. Oppenheimer raising its price target on the stock to $325 from $275. That stock up 31% right now.
And a stock to watch after the bell, that is NVIDIA. Earnings from the world's most valuable company due after the market close, seen as a key test for the AI-driven bull market. NVIDIA expected to post record revenue and adjusted operating income. So we'll keep our eyes on that, Wolf.
Negotiations between OpenAI and Microsoft about the future of their relationship will likely bleed into next year. That's according to a Financial Times report, which says sticking points between the two sides include Microsoft's access to OpenAI's application programming interface and whether the tech giant gets an inside look at how future OpenAI models are trained. In addition, the FT says the two sides are wrangling over what will happen if and when OpenAI achieves artificial general intelligence. An OpenAI restructuring could lead the way to an IPO, but failure to come to an agreement might put additional funding at risk.
Shares of Abercrombie & Fitch have been moving after quarterly results. Earnings of $2.32 per share came in 2 cents better than estimates. Revenue of $1.2 billion in line with expectations. Same-store sales rose 3% as expected, but Abercrombie's store sales fell 11%, while Hollister sales surged 19%. For the full year, the company is narrowing earnings guidance while raising its revenue outlook. And I still have those cargo shorts that my wife says I'm not allowed to wear from Abercrombie & Fitch from about 15 or 20 years ago. Coming up next, New York Fed President John Williams on tariffs, the economic outlook, and the battle between the president and Fed Governor Lisa Cook. You do not want to miss this conversation. Lots of news and headlines coming your way after this.
Watch.com.
Time now for a very special interview with New York Fed President John Williams. For that, we want to head over to Steve Leisman. Mr. Leisman.
Andrew, thanks very much. I'm here at the New York Federal Reserve Bank with New York Fed President John Williams. And I want to make a note to viewers that obviously there's a lot of things happening with the Federal Reserve. These things are scheduled pretty well in advance. So, John, thanks for joining us.
Steve, welcome back to the New York
Yes,
Fed.
it's always great to be in these incredible hallways here. Let me begin with the news of the day, which is that the president, for the first time in history, has fired a governor of the Federal Reserve Board for cause. I wonder if your reaction to the president's actions and your reaction to the allegations against Fed Governor Lisa Cook.
Well, I don't have anything to add or say around it and the allegations. Obviously, that's a legal process. I'll let others speak to that. Personally, I have worked with Lisa Cook as she's been a member of the Board of Governors, and she's always brought, integrity and a commitment to the Federal Reserve's mission. She's a very esteemed and highly respected economist. But I think the broader picture, obviously, is that, I think Federal Reserve central bank independence is very much very important. It's important not because it's convenient or anything like that, but because we know from history, from experience, that independent central banks can deliver a low inflation, economic and financial stability, and we know the structure of the Federal Reserve is such that it's designed to have independent policymakers who are making decisions that affect the economy over the longer term, away from short-term political pressure, and I think that's really, really important.
But if the president can fire somebody based upon allegations, does that threaten the Fed's independence?
Well, again, I'm going to just speak to the importance of the independence and something that, I think is proven to be valuable around the world. We see countries throughout all the continents really have turned to having independent central banks like we do, so that you can get the best outcomes for the people of the country and in our case, for the United States and quite honestly, for the world. The Federal Reserve is obviously very central to the health of the U.S. economy and the global economy.
So one more question on this topic. There's this one issue that seems to come up, which is the issue of Fed independence and the president perhaps threatening that with these by firing Federal Reserve Board of Governors. On the other hand, there are the charges. The idea that the Fed Governor Lisa Cook might indeed have committed mortgage fraud. How serious is that?
Well, again, on these accusations, I don't have anything to say to that or add to that. I think really that's a process that's underway and should talk to the people involved in that.
Move on now, John, to your outlook for the economy. GDP has slowed. Payroll growth has slowed. How much concern do you have that the economy is weakening or softening here?
Well, it's absolutely true. GDP growth has slowed in the first half of the year, roughly 1.25% growth at an annual rate relative to about 2.5% last year. My expectation is that's going to continue through this year, but that's a slowing economy. It's not a stalling economy. We look at a broad set of indicators. I think we're seeing kind of an economy going through an adjustment process, partly the continuing adjustment from a post-pandemic, partly an adjustment to some of the policy changes that have happened, including trade policy. So I see that as something that's been ongoing. I'm watching very carefully, watching all the indicators in the labor market, spending. So my view is the economy is growing, will continue to grow. For the year as a whole, maybe 1 to 1.5% annual rate, a little bit, like I said, a little bit slower than last year, but still a positive momentum going forward. But I'm watching that data very carefully.
You have described the job market as solid, but we've also had, and this was after the big revisions, how do you make that claim if we're just doing, I don't know, on average 35,000 jobs a month?
Well, there's two different, you're asking kind of two different questions, so let me go to both of them. First of all, when I say that the labor market is solid, which I think it still is, I'm looking at the state of the labor market. The unemployment rate, which is 4.2%, which is historically a very low number. You look at other indicators of labor market strength, including from surveys of households, surveys of businesses, how easy is it to find a job, how hard is it to hire people. Those are also in I think in a solid labor market, and other indicators like quits and higher rates and things like that. So I think the state of the labor market is solid. We've definitely seen a slowdown in the pace of hiring in payroll growth, as you mentioned, And I think some of that is really a slowdown in the supply of labor. As we all know, the labor force is growing more slowly now because of slower immigration, much slower immigration. So we're seeing slower supply and slower demand. And the hard thing to do is to figure out, well, is one slowing more than the other? The test of that is kind of the unemployment rate. The unemployment rate's been pretty steady, low fours. It hasn't really changed over the last 12 months. Other indicators, I think, have, I would say, gently softened over the past year, but again, still a solid labor market.
Do you have a number or a range in your head of what the break-even rate is for it? In other words, how many jobs do we have to add each month in order to keep that unemployment rate steady?
Well, that's really hard to determine. I mean, there's a lot of estimates out there. In kind of more normal times, people talk, say, before the pandemic, maybe 100,000, 130,000 or something. Because of the changes in labor supply, that makes it very hard to know. When we had strong immigration a year or two ago, then we saw the break-evens clearly be much higher than usual. Now they're much lower. I don't have a good estimate. I think here is one of those times you have to, really show humility about the ability to understand what's happening exactly with labor supply. We don't have great real-time estimates of immigration flows. So I, again, look at these other indicators like the unemployment rate and others that are telling me kind of how that balance is looking. And the final thing I'd like to say is, wage growth is a good indicator of the health of the labor market. Wage growth continues to be, I would say, consistent with a solid labor market and inflation coming down towards our 2% goal.
So this is important. You're saying you would not sort of push the panic button on the jobs market if you had even running lower payroll numbers, if the unemployment rate, wage growth, and other ratios suggested there was still health in the labor market.
Absolutely. Now, that's absolutely right. I do think, I have studied, previous downturns, and if payroll growth, became very negative or turned kind of convincingly negative, I think that's telling you something different. But that's why you also look at other measures like initial claims for unemployment insurance, which are also very low. And there are other indicators that maybe are better signs of maybe a turning point in the economy.
Let's talk about the other side of the mandate, inflation. There was some concern among some of your colleagues, Austin Goolsbee comes to mind, that the recent inflation numbers were not limited to just tariff issues. What do you see when you see the inflation numbers, and how concerned are you that they're moving incrementally and slowly, but away from target?
I think the underlying inflation, if to the best you can, say, set aside the direct effects of tariffs, we have seen inflation come down gradually over the last few years. It's very gradual now, and it's hard to do this kind of, in a way, separation of effects of tariffs from other dynamics. We have seen a slowing of housing cost inflation. Where we've not seen the slowing recently is kind of the services excluding housing. So I'm watching that data carefully. If you look at the data, we're going to get the new numbers later or soon, but the estimates are that core PC inflation will probably come in around 2.9% based on what we know from CPI and PPI. So I would say that maybe you're getting 4 or 5/10 of that from tariffs. The rest of it is still above our 2% goal. It's been coming down, but it's coming down pretty slowly.
So the market thinks you will be cutting rates, and many of your colleagues do as well. The chair seemed to suggest that was on the way. Are you on board with a rate cut?
Well, in my view, if the economy evolves the way I hope it will, and that means that inflation, after adjusting for the tariffs, inflation comes down over the next couple of years, the economy stays in relatively good balance. I do think at some point we need to move interest rates closer to normal or a neutral stance. We are still in I would say, modestly restrictive stance. I think the evidence shows that the economy is gradually slowing. As we talked about, inflation is gradually coming down. And so if things move in the way that I hope they do in terms of our maximum employment and price stability goals, then I do think it will be appropriate to move interest rates down over time. But we got to be driven by the data. We got to see what's happening in inflation. We got to see what's happening in terms of the labor market, and it is really where the balance of risks to achieving our goals.
Well, I was going to ask you that. What is the balance of risk? Are you more worried about the inflation side or the employment side of the mandate?
Well, I think think those are moving closer to back into balance in a way, if you will. We definitely saw inflation very high earlier. That was the primary goal, was to get inflation down. We've now seen the labor market cooling gradually cooling over the past year. So we don't want the labor market to weaken too much, but we also want to make sure that we keep the economy in good balance so that inflation comes back to 2%. So I think that those are getting closer to balance, but we're going to have to just watch the data and be driven by that.
So, I mean, you could respond that if they're in balance, why change rates at all?
Well, because I do think we have a modestly restrictive stance of policy.
Okay.
We are putting downward pressure on a little bit of downward pressure on the economy and on inflation, which is appropriate. The question is, do you need to have the amount of restriction in terms of policy in it, or can it be somewhat less? And I think we just have to do our very best to adjust policy over time to make sure we achieve our maximum employment and price stability goals.
I smiled before when you said getting interest rates back to normal, because that's like your life's work. Let's figure out what normal is. So let's talk about that a little bit. You have this formula that I look at, I don't know, not every day, but every week, because it doesn't move that much, but suggests that the real or inflation-adjusted funds rate should be 0.7%, which add inflation to it, at your target, it's 2.7, which means you're like 160 basis points restrictive, or you add the current inflation rate of 3%, and you're 50 basis points restrictive. Tell us how you think about that. Is my math too simple for your complicated formula?
Well, I think your math is right. It is. The world's more complicated than that. But I think that the point you're making is, at least from my point of view, if you think the neutral rate is somewhere around 1% or a little bit below, we are still in a restrictive stance in monetary policy. And as inflation comes back down to 2%, we're going to need to get interest rates lower than they currently are. That's how I feel about the longer run. In the shorter run, I think that's more of it's the longer run R-star kind of thing is telling you kind of where you're where your destination is. In terms of the shorter run, it's all about all of the different data, the totality of the data, and the balance of risks to achieving our goals.
So is the idea, John, that you could take a couple points or a couple quarter points off the top and you'd still be exerting downward pressure on inflation, still be restrictive, or at least closer to neutral?
I think that's my personal view, that we are modestly restrictive. So you could take reduce interest rates and still be somewhat restrictive going forward. But again, we're going to have to figure out exactly what's happening in the economy. There's a lot of uncertainty about all of these things, so we just have to be driven by.
We just put up a thing there, John. It says an 84% probability for a cut in September. But I noticed you've been dancing around giving me a date. The old joke in economics is give them a number, give them a date, but don't give them both. Is September on the table for you?
Well, I definitely think that every meeting is, from my perspective, live. Again, we're getting the risks are more in balance, and we have to just see how the data play out. I'm pretty optimistic about where the economy is. I think we're in a pretty good place in terms of keeping unemployment pretty low, in the low 4s, and having inflation come back down to 2% over the next 2 years. But we can get surprised, and we need to be driven by what's the totality of the data and the risks.
John Williams, Fair President, thank you for joining us here.
Great, thanks, Zach.
And great to be here, guys. Back to you at NASDAQ.
Steve, great stuff as always. Thanks so much for that. We're going to take a break here on Squawk Box. When we come back, we'll be joined by the head of investment strategy, Edward Jones, expecting 2 rate cuts this year, what it will do for markets, and also why you should be in financials, also healthcare and retail stocks. Mona Mahajan joins us next.
us.
Welcome back. Let's talk markets and where to put your money to work right now. Joining us is Mona Mahajan, Principal and Head of Investment Strategy at Edward Jones. Mona, a lot has been made of kind of the muted response to the news surrounding the Fed, what the president can do regarding Lisa Cook's job. Were you surprised by the market reaction? And if it doesn't react, what does that tell you about how much the market effectively cares?
Yeah, you know, look, I think the market does care about Fed independence. We know, first and foremost, the Fed is a body that protects long-term economic stability. And if that is disrupted in any way, we could see market volatility, rate volatility. In fact, yields could start to move higher rather than the lower goal that the administration has. All that being said, you know, the Fed Board of Governors, they do have some scope of responsibility, including discount rate, including reserve requirements. But the broader monetary policy is still set by a 12-member FOMC board. Very difficult for one or even two members to sway that, even if it is the Fed chair himself.
So you don't buy this notion that by even going this route, by firing her over a post on Truth Social, that sends kind of a shockwave to the rest of the members that, you know, you have to either get in line or deal with something that Lisa Cook is doing, that it's not some sort of signal to everybody else.
Yeah, you know, I think the American people still have faith in the overall process and the system, and that Fed independence will remain intact in some way, shape, or form. And I think that is the bottom line in terms of what we're seeing in the market reaction as well. And we're hopeful that over time, that is kind of the direction of travel, and the administration realizes that is probably the best for all parties involved.
So looking ahead to today,
yeah,
we probably the most important day of earnings season, you know, at least in the last couple of years, has been NVIDIA's earnings day, which is after the bell today. How do you see it all playing out? Expectations are very high. It has a strong potential to move the market in either direction. So what are you advising clients going into today's print?
Yeah, you know, look, NVIDIA is always a bellwether for the AI technology trade. We expect very strong results. Their revenue should exceed 50% year on year. Of course, that's slowed over time from triple-digit gains to down to high double-digit gains. Nonetheless, we think the AI technology story is one that investors have to have exposure to. We know probably a secular theme, 3 to 5 years still in the forward outlook. When we think about it, of course, right now, we've seen all the gains in the infrastructure players of AI, whether it's semiconductors, whether it's the data center players. We do expect over time that will broaden to some of those sectors that benefit from the productivity gains, whether it's financial services, healthcare, industrials, and manufacturing, all should participate over time. And by the way, if the Fed is cutting rates, some of those sectors may play some catch up as well.
Where do you find the sort of sentiment for most of your clients at the moment, and you guys internally? Is it overly stretched or not particularly?
You know, look, we've had a nice 30% rally in the S&P 500. A lot of our clients, advisors are asking, is there going to be a pause upcoming? And we are headed into a seasonally choppy, you know, historically September and October can see some volatility. All that being said, I think many realize that as we head into 2026, we see a couple of positive momentum factors. One, of course, we talked about the Fed potentially moving rates lower, even gradually. We also see the tax bill that's just been put in place having a little bit of fiscal thrust. And the third factor I'd mention is the cash on the sidelines, whether it's money market, cash-like instruments, all of that might come into play, especially if in 12 months from now rates are a bit lower. So we do see this possibility that we could get this reacceleration in 2026.
At what level are you looking for some of that cash sweeping phenomenon to reverse itself and move back into the markets? What rate level usually allows that to happen?
I think if the Fed does move rates more towards a neutral level, call it 3.5% or in that range, you could start to see some actual movement. Historically, though, where we are now, 4% plus, pretty good yields versus, you know, the last 10 years or so. If you're in retirement, near retirement, you're getting a good rate of return. But if you think of that at the 10-year Treasury level, you can lock in that rate now for about a 10-year horizon and have that potential for price appreciation there as well.
In terms of rate levels, what level, if we do see longer rates rise, what level spooks the equity market?
Yeah, you know, look, historically, it's been around that 5% 10-year that has been a kind of a hindrance for the equity market. But all that being said, we do think that the the 10-year is likely to remain range bound here. It's been in this kind of 4.5% range unless something dramatic happens in terms of whether it is debt or inflation. But for now, we see both of those, especially on the inflation front, likely remaining in a contained range.
Given what you mentioned with regard to 2026 and the potential for rate cuts, the potential for some fiscal stimulus from the One Big Beautiful Bill filtering through into the economy, are you worried that inflation may pop back up again? And then what do you do from a portfolio allocation standpoint now in anticipation of that?
Yeah, look, I think even the Fed has acknowledged it's still caught in this, between a rock and a hard place. Inflation, whether it's tariff related or stimulus related, there is a potential for it to move higher. Now, from a tariff perspective, the Fed has at least indicated a good base case scenario is that perhaps there's a one-time shift higher in the price level of goods, and from there we should see some stabilization. So we also are in the camp that we could see inflation rise, in this 2.5%, 3.5% range now. Maybe it goes a little bit past that, but we don't see it returning to this kind of 8-9% type range we saw post-pandemic. So still hopeful that the inflation rate is in this contained range. Over time, we see it moving in towards the Fed's 2% target, which is the good news. And so I think despite near-term inflationary pressures, we think the Fed is focused on the labor market, and of course 2026 looking better than expected.
Mona, thank you so much. Appreciate it. Squawk Box will be right back.
Favors the bull. Breaking on Squawk Box this morning, sources telling CNBC that Fed Governor Lisa Cook may file a lawsuit against the White House as soon as today to prevent her firing. And New York Fed President John Williams said he's seeing a gradual decline in inflation. Williams also said it's appropriate to lower interest rates over time, but wouldn't say September is the right time. Meanwhile, coal's up big in the pre-market, a 20% jump after posting earnings that topped Wall Street estimates. That stock has doubled in about 3 months. That does it for us. Wilf, Leslie, thank you for being here. We got a lot more coming up tomorrow, and in the meantime, we're going to hand it over to Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Futures relatively steady off the morning highs as the Street does brace for NVIDIA tonight. And in the meantime, pretty nice series of beat and raise from MongoDB, Box, Okta, even Kohl's. Yield curve is steepening though, 2's highest since April. Our roadmap begins with bracing for NVIDIA's earnings a few hours away. We'll get you set up.
Plus, Fed Governor Lisa Cook says she will sue to prevent President Trump from firing her. This is Trump says he'll have a Fed majority soon to push for lower rates. And the president's 50% tariffs on India are going into effect. In fact, have gone into effect. I think it was 12:01 a.m. That includes a 25% levy as punishment for buying Russian oil. India now one of the highest tariffed countries in the U.S. trading sphere.
Let's begin with NVIDIA's results due tonight after the close of trading. Jim, implied moves about 6%. It's pacing for 5 consecutive months higher.
Yeah, okay, so we actually had the CEO of MongoDB on this morning. Talked about the overspend. Are the hyperscalers overspending? Does it really matter if we're so early in the game? It talked about hallucination and the problems there. I come back and say that the answers to everything come to this company. You cannot have generative AI the way you'd like to without NVIDIA. So you're going to have what some people say overspend, but it's table stakes. It's the price to be in the business. David, there are a lot of people who feel this will come up tonight, that the total cost of ownership in NVIDIA has gotten too high, and you can't make money with it.
Total cost of ownership, explain what you mean when you say that.
Oh, because if you buy the stuff and then you have it inserted by Dell and you try to train on it and you have the inference, it turns out that you lose money.
Because you're just spending so much, you're not getting a return.
Right.
But I mean, OpenAI is losing an enormous amount of money.
Right. But it's worth $500 billion because of
what is expected to be coming in the future.
Right. Now,
obviously, they're spending most of it on data centers and NVIDIA equipment.
Okay, so the wrap is that NVIDIA makes all the money and nobody else does. And that's what has to be addressed tonight. Not China. I mean, everyone's going to say China. It's like, yes, okay, so you're a parrot. Like they have parrots in London. Actual parrots running around there. Well, that's those people. China. Why China? No, I mean, like, no kidding, China. What matters is that we hear from Jensen Huang about how that whole narrative that the spend isn't getting them any results is false. That's what we have to hear.
But is it false?
Well,
I mean, we early days,
Where's the
no
leather
doubt.
jacket? Get rid of that
But
picture.
in terms of spending on the in the enterprise and seeing real returns at this point, still hard to say that that's the case.
I'm not going to disagree with that, but I think that Jensen might. I think Jensen might be able to say, look, the return here is monstrous, but you just have to be able to bear with it. It's monstrous.
Everybody believes it will be. But
Well, okay, so
and it's all so much of it's anecdotal. But when you do talk to people in terms of how they do their job, yes, they become more efficient. But has it really replaced certain things? And by the way, this gets to the whole debate about software as a service and whether that threat is real or not. Heard on the street today in the Journal saying this is blown way out of proportion. You can't replicate with AI all the different things that you're doing with your key software providers.
Look, I think that that's a really important narrative, but I think that what's more important and why this conference call is so valuable is that if that's the case, what's the demand? I mean, the demand, some people say it might be as high as 10 to 1.
Yeah, that's Webb Bush's figure from early last week.
That's Dan, sartorial Dan. But I do think that there is a case to be made that this is by far the most important stock in the market, and I'll tell you what.
Percentage of market cap.
No,
will tell you that.
That's not, you're not going on a limb there, partner. What kind of a face is that?
Because the reason I say this.
Okay.
Okay, so people at home listen because I know this guy isn't. For the longest time in the world, software is what mattered. Okay. Before that, by the way, it was just oil, which I think you're probably going to talk about with Mr. Rosneft. But it was these. It finally became semiconductors. And for the longest time, until Lip-Bu was the only person, Lip-Bu Tan, that you now love to from the White House,
CEO of Intel, yes,
was saying, listen, one day semiconductors are going to rule the world again, not unlike dinosaurs. And what happened is, it happened because of NVIDIA. And the reason why I now really like it's got a nice software component. Why did you say that's obvious? I think that's.
You said, first of all, that you can make an argument that it's the most important
and
stock.
our response was it's the 12th of the S&P.
Well, like how? Of course, it's the most important company right now.
No, I'm just saying the zeitgeist in this country had always been enterprise software. That's where you made all your money, right? Software.
Yeah.
Everyone wanted to imitate Microsoft.
Yeah.
You have this one company, but you do not have the other semis. Although Broadcom, arguably, yes. But it's just this one semi. But semiconductors have reasserted what maybe from the days when Intel, when the
Texas.
well, no,
you want to go way back to Texas
Yes,
Instruments
yes,
the early days
my,
of Morris Chang, and yeah.
I do. Well, I'm just trying to put it in the. People at home are trying to figure out why we are so possessed with NVIDIA. If it looks like that no one's getting real return from NVIDIA, if it looks like that they had to go to the president and get China, like what's so significant about it? And the answer is that we are either going to make a lot of money with AI, right? Or Dev Ittycheria from MongoDB says, listen, no one's going to make any money, which means the only company's going to make money is NVIDIA, which means in the end, you're going to hear someone break ranks. That's what everyone's scared about, is the break ranks.
Right. Meantime, we've got a piece up on our website about some of the rivals in China. CambraCon is getting a bunch of notice today. Adds to $40 billion rally with 4,000% revenue jump. Are you on the lookout for signals of competition?
I think you have to, but frankly, I don't trust anything from China because I remember look, DeepSeek got people out 50% ago, and that was a disaster. I'm trying to keep people in. And I try to keep people in. And why I wore, by the way, just so we know, my NVIDIA cufflinks today, because I want people to be in.
They're in.
He was a good boy.
They're in.
NVIDIA was great.
But it's
remember 2017. Where were the other guys? When I was naming my dog NVIDIA, where were the other guys? Now they're all in the party at 4.4 trillion.
Do we really believe there's a chance that AI is going to not be what many anticipated? That it is not ultimately going to.
Okay, well,
it's slowing. Certainly, the reviews, for example, for ChatGPT 5 have been less than stellar.
No kidding.
I think.
I was doing some stuff on CSX, and I did ChatGPT. I had to just say, this thing is
you certainly
unhelpful.
see certain areas in the enterprise and certain job functions that are going to be replaced, but it's not clear yet what the full.
Right, well, that was again Dev's.
Suite
The
of
reason I'm
services
mentioning
that we'll
Dev,
be able to offer is.
I mentioned Dev because his stock is up 70 points.
The MongoDB.
Yeah, and what he said was basically, look, it's not.
I don't know why we have Joe Hendricks on there, but that's nice.
Well, it's just important to try to do a little treasure hunt.
Yeah.
Treasure hunt feel like TJ Maxx.
Yeah.
Yeah, here's some $18
Did you
pants.
didn't mention CSX, did you?
No.
No.
But to David's point, I mean, private credit funding of AI is running about $50 billion a quarter. These are usually 20, 30-year terms.
Right.
And we don't know what this technology is going to look like in 5 years.
No, we don't. And we don't even know what it's going to look like when Vera Rubin comes out next year. And I think that's important. Look, I'm just trying to make the point that right now there is a definitive kind of zeitgeist that these hyperscalers are spending way too much. And they're not getting a return.
Yeah.
And that is the principle.
And by the way, if that's still the case a year from now, that is really going to grow as criticism.
Oh, it absolutely is. And these companies are spending hundreds of billions of dollars, and people are saying, look, Apple hasn't spent anything yet, and their valuation is still very high. My Apple Watch is going off because I got exasperated by David, so I'm taking it off right now.
It's like,
making noises.
Are you working out?
It says that I'm furious with my, it says that I fell or something.
Looks
Will
like
you stop?
Looks like you've taken a hard fall.
Thank you, nanotechnology.
Do you want to make an emergency call? Are you okay? Can we turn the damn thing off? I'm exiting.
You can't turn it off.
No, I exited. It worked.
I'd love the paramedics to get here. What happened? Oh, David got us set off.
David got me upset because I think you have to recognize that this is the most, because of the numbers you cited, this is the most I've ever heard of emperor no clothes. And yet I think we are right at the cusp of reasoning. And the thing that bothers people is right now it's a souped up Google. People won't call it that, but I'm calling it that. But what I'm saying is that we're so close to reason, so close to be able to have a dialogue and it correcting us, that you want to get off the horse now.
No,
You
I
get
get
forced
it, and
down.
I don't think many people are. But an inference is obviously incredibly important.
Yes,
it's not as clear that the chips that China has may be successful in running inference as opposed to large language models and training, which certainly need the highest level GPUs. It would seem.
Yeah.
Sam Altman, says it's like having a number of PhDs in your pocket. But again, back to ChatGPT 5, there's others who would say, "Oh, I'm not so sure about that."
Meanwhile,
that's nice.
The Treasury Secretary is on the tape today arguing that we might see this so-called productivity boom showing up beginning in Q1 of 26.
Yeah, well, look, the productivity boom is going to come from not hiring as many people as you had to. This has so far not happened, but over and over again, it's the agentic. It's like, yes, if you bring Salesforce in, then you'll be able to not hire as many people, or maybe you can move them over to something else. Although Salesforce, everyone's worried about the quarter, because it's why? Because it's enterprise software. Everyone's worried about enterprise software. I would come back, David, and I would say, and I don't know why people don't get this, but what are you going to do without NVIDIA? If the other guys have NVIDIA. And the reason I point that out is take a look at the Morgan Stanley piece today, the most significant piece of research I've read in a long time, by Brian Nowak, who was the skeptic on the conference call, that perhaps this is to Andy Jassy of Amazon. Perhaps he's underspending, okay? Now, Andy then just gave a very long soliloquy that was a very thoughtful, but we weren't looking for thoughtful. We were looking for coming out of the tunnel, Ray Lewis like.
I remember you were not. You thought it was not. You thought it was a less than stellar answer.
Well, it's just I like Andy. I like the Andy Jassy comes out there.
This is a piece from Nowak on AWS, right? On Amazon.
Yeah, on Amazon. What he's saying is that Amazon is now going to accelerate spending. Now, Amazon has taken a lot of spend. Amazon's view is price performance is what matters, which is why they use their own Trainium.
Right, they design their own chips as opposed to using more NVIDIA chips.
Because Andy likes to make money, and he makes a lot more money than everybody else. But everyone thought that Microsoft, which may be aided by OpenAI, accelerated their spend and therefore accelerated their business.
Right.
This piece says basically that was the narrative. I'm going back and saying it's not. Amazon spending more. They have to. 2026, they're going to get to re-accelerate the growth. 17.5% growth goes to 20% growth.
Of AWS.
Right. AWS.
And that was
the
what
growth fears on AWS was short-lived in your
Wait, yes.
Or
the
their
growth fears had to do, and I helped propound this, which was, I think, in retrospect, ill-advised by me, that you couldn't, that Amazon was underspending with NVIDIA.
Well, that's because you said that over and over again.
Did I say I was ill-advised or not?
Careful, the paramedics are going to
gosh. Oh, ooh, that's a nice one, me and my daughter. Don't tell my wife, because she thinks they're all with me.
Nice, it's a nice piece of hardware.
Well, that's because the rubber band, remember I had the rash problem?
No, I like the band.
Yeah, the rash problem has been, they're still checking with that. It might have been a pesticide for my garden. But I stick with the idea that Amazon spending more.
Yeah.
I needed to hear
And
that.
that's
I
just
was
not
very
good.
concerned that Amazon, by the way, Andy Jassy.
So to your point, another positive for NVIDIA.
Yes! Although you might say it might be Trainium, I want to go that way. And Nowak finally was blunted, and then he turned around and he had some sort of Saul-like Damascus conversion here, I think.
Interesting. We're going to be talking about NVIDIA, of course, all day long. Take a look at the pre-market. Tons of movers to get to today, including Box, Kohl's, Goose, A&F, Foot Locker. Jim mentioned Exxon briefly. We'll get to Lilly and some sell-side research after a break. Sources tell CNBC today that Fed Governor Cook could file her lawsuit to overturn her firing by the president as soon as today in D.C. federal court. Yesterday, during his cabinet meeting, the president defended ousting Cook on allegations she'd committed mortgage fraud. Take a listen.
You always have legal fights. Look, I had a legal fight that went on for years with crooked people. She seems to have had an infraction, and she can't have an infraction, especially that infraction, because she's in charge of, if you think about it, mortgages, and we need people that are 100% above board, and it doesn't seem like she was.
The president appears ready for a fight, he said. He said, we'll have a majority soon, referring to the Fed.
Yeah, look, I think that when you look empirically about how Federal Reserves have done when they're perceived to be owned by the leader of the country, they tend to have less success in running an economy. I mean, that's just empirical, David. It's just the way it is. So you may want to control the Federal Reserve. Maybe that's good short term. But longer term, given the fact that we have such a big budget deficit, there'll be people who are less likely to want to take our paper if they feel that it's run by an executive who's been elected by the people as opposed to someone who is a little bit, let's say, insulated.
Yeah, I mean, we're not seeing an impact in the markets, certainly not at this point, and that's been discussed a bit.
Well, I mean, there's a lot of talk about bull steepening today.
Yeah, that's true.
5s, 30s, I think you got to go back. That's 117 basis points going back to 21. 2s, 10s we mentioned since April. I mean, short-term rates are falling and the high end's not budging.
It's very interesting because on the Home Depot call, which was such an excellent call, they talked about the need to be able to at least get the short-term rates down for home equity loans because they're not having to do it, not having many remodeling, which you need either remodel or sales. Now, sales is the long end, but remodel's the short end. They'll take either, and they are the biggest.
I know people who think, the long end's going to go a lot higher, in fact. And
you buy that?
I don't know, but they're sitting there saying, hey, well, I'll be happy to collect 5-6% at some point.
You think
as
because,
we see
because of
diversion
because of the independence of the Fed?
No, because rates are going to go down when they potentially maybe shouldn't on the short end.
Well, I think that...
And that they can't control the longer end.
But the excellent interview by Steve with Williams, there is a clear deceleration.
There is. And
I mean, what are you going to do? You just...
Those people who believe that may be incorrect, but there is definitely a school of thought that says you're going to see that widening.
Meantime, core PCE is going the opposite direction.
I know. I mean, look, I would love to hear from the president not to worry about the long rates. They'll come back down. We did pass the big, beautiful bill, which is just accelerating spend in this country dramatically. We're starting to see that.
Yeah.
We're starting to see the bill have effect. Now, if you want to have economic growth, you're getting it.
Yes.
You are. You're getting good economic growth in the country, but you also therefore have to
Unless you want to finish a wind farm, then you're in big trouble.
That's the way you like that Orsted. Sorry, buddy.
I'm just saying, they got 45 things in there. They only have a few more, and now they can't finish it.
Well,
we don't need energy, though, right? We don't need that. That we don't need.
Well, look, I mean, Germany dismantled all of its nuclear power plants, but they forgot that it's not always sunny in Germany.
What does that have to do with this?
Well, I'm saying that alternative isn't always right.
When you're almost done, and you've got something that's going to power 400,000 homes?
Have you...
Are you really going to try
like
to...
wind.
You're going to try and defend
I like my
this? You're really going to try and defend that one?
No, look, I was...
You were just trying to deflect and take it somewhere else.
I know, I don't like
so you didn't
offshore.
have to answer the question.
I don't like offshore because of what happened in Nantucket. I don't like offshore. Because once those blades break up, that's a suboptimal situation. I don't think offshore works. Onshore, I think is terrific. I'm sorry, I think it's terrific.
Meantime, on the Fed,
don't make any money. They don't make any money on it.
You kind of sounded for a moment like the Wall Street Journal editorial board today. Trump's all about short-term tactics and personal political advantage. Institutional integrity bores him. If he succeeds at taking over the Fed, he and Republicans will own the results and whatever inflation returns.
Well, that's been look, I think they're just making the empirical historical argument. There's no denying it. You can't come out and say no. Historically, when the president controls the equivalent of the Federal Reserve, countries have done that.
I mean, Turkey is an example. There are others.
Oh,
Greg Gibb writing something similar today as well. Somebody worth always a read.
How's Zimbabwe? What are they doing?
I wouldn't really compare.
But you mentioned Nixon and Arthur Burns. That's an example right here at home.
No, it's empirical. Look, maybe this is going to defy it. Maybe this is the one time where we'll have tremendous economic growth. We'll have no inflation whatsoever, so therefore you have to normalize rates, and that would be fantastic. Maybe this is the one time.
That would be Nirvana. It would be great.
Nirvana.
Nevada. And maybe it'll go back. We'll have enormous efficiencies as a result of the AI, proliferation of AI.
Well, this is the bull
bringing
case.
costs down.
Look, I'm not going to disagree entirely with the bull case because we're a great country and it's happened, but it's not been the way. It's not the odds favor. Right.
We'll get Kramer's Mad Dash countdown to the opening bell. One more look here at futures. The last pre-market before NVIDIA tonight. Squawk on the Street's back in a minute.
I'm here. I'm here. He's here. Jake Paul, where the fuck are you, man?
Something right on this chart. Most of the earnings prints today are pretty positive. Smucker might be the one exception today, down 7 pre-market as they missed by 3 cents. They actually raised the full year guide a touch. They see sales up 3 to 5, prior 2 to 4. We'll get to all of that. Opening bell a few moments away. Don't forget, you can catch us anytime and anywhere. Just listen to it, follow the Squawk on the Street Opening Bell podcast.
Oh, mama, I'm excited. I'm almost out of breath. Oh, mama, I'm excited. I'm almost out of breath. We got company coming up the road. I'm excited. I'm almost out of breath.
Oh, hey, it's me. I'm looking at all these mascots for the Big Ten. Sorry.
Well, yeah, that was
Yeah, we got Abbott Labs and Blood, and then we got a bunch of Big Ten mascots. And we're still trying to figure that out. But you know what we can't figure out is a mad dash. What do you got?
David, Smuckers, the stock has called message down really badly, and September 11th of 2023, they bought a company called Hostess, okay, and they paid $5.6 billion, including debt, and they are still paying the price of that because this was still, while they're trying to cut they're trying to do everything they can to rationalize this, it still keeps hurting them. Coffee was okay. They had raised price coffee because of the obviously inflation and tariffs from Brazil. I like Uncrustables. Once again, Uncrustables is doing incredibly well. Number one in frozen food, but it's going to keep coming back to the sweet baked snacks. And David, I just can't be happy about it.
Right off support, Spy.
They are doing the.
Spy hit my support and triggered 2 of my alerts. I'll show you where I got this support at here in a second. Go to the 20-day 1 hour. Oh, can't show it on this chart. That's where them orbs kind of come in my way here. So, where was that? Was it the Spy? Oh, yeah, here it was. It's right in here. You got a yin yang, double top, triple top break. It pulls back, creates a trend. See how even that is? Only I will show you that. And right to the penny. Nobody knows the yin yang better than I do. And that's a tweezer bottom on the 1 minute. Oh, God. Nobody knows the yin yang better than I. Nobody knows the yin yang better than I. 646. And if we pulled back to 645s, if we break the 63 right here, I'm not in it. I'm going to just give it time. We got NVIDIA pulling back, and we got earnings tonight. So we're definitely at a support right here. Double bottom. And it's a yin yang. See if that holds. China chip maker seeking to triple output advanced processors next year. So, who gives a shit? Sorry, Jesus. Sometimes I don't know what I'm saying. We're at the 63 on the 1 hour. We're after 1, 2, 3. Actually, we broke the 1, 2, 3, so it's the 63 on NVIDIA. On the 1 hour. I should go back and put a support line on that 1 hour. I mean, right to it. $180.58. So if we come back and touch that again for a double bottom on the intraday. Well, that's not in double bottom. I think one of the saddest things that ever happened to me trading is I traded with a guy for years, and he called me up and chewed me out, told me that that wasn't a double bottom. Just got nasty. I said, what the heck's going on? And then 2 weeks later, he dies. I'm going, shit. I didn't even get to say goodbye. See if that holds. Let me see where the SPY is here. I think it's a wait and see kind of day to find out what's going to happen with NVIDIA. But eventually it's going to break out. And so I got to look for the best deal right now. Oh shoot, SPY's up at 110. We could break that orb. No, we can't. It's right at the orb. So we're at resistance right now on the SPY. Real solid. If that breaks, NVIDIA's down $1. Oh man, I tell you what, I love this knife. I really do. I'm gonna go for it. just to get a small starter position, 190s. I really like the 185s, but they're a little expensive for this weekly thing. Okay, here we go. I might jump into the weekly now. I mean, to the 185s. Just grab one. We got a symmetrical flag. $4.10. This is called a day trade. 185 strike. Weekly. Come on, get it to me. It's being stubborn. I want 410. There it is. Up, strike is 185 at $4.10. Just grab one. Now we're definitely right down here. Ah, fudge. Come on. You cowards. Didn't hold the flag. We have 3 black whores. So I don't gonna really monitor it all day. I'm just in it. And if I'll take a $50 loss on it if it gets bad. I'm still in it, but yeah. But $50 is it. We got a double top on the SPX. It broke a little bit here. We're not there yet. We got to wait for this last candle. $64.68.03. And when we're at the VWAP on /ES. So now we got a double top. It didn't break. AMD looks kind of good, but what's Tesla? Where are you? Tesla broke out past 150, 350, and pulled back to the 200. I've got the Fibonacci set on AMD, and we're at that third support, which is 62% pullback at 165.03. God darn it, this thing ain't doing it. Down $30. Oh, mama, I'm excited. I'm almost out of breath. Oh, my tea's been sitting too long. No, this ain't bad. This is the third time. I use tea leaves, and usually they can go through about three soakings. This one's been soaking for 15 minutes. So it ain't that bad. There we go. I think I'm about done here. $45. Tesla's pulled back, a little knife on Tesla. Still in it. Heading out to Punta Cana, Dominican Republic Friday. Mm-hmm. We got support. We hit support here on the SPX. Almost 64.64. I better put this where I can see it. Nice little bounce on the /ES. Oh, I got that girl's phone number. Ah! Misty Way. I've never heard a name like that before. Her name's Misty, and she probably just made up something on the back. Yeah, I've got a girl, man. Check it out, baby. Call me, she says. Call me. When girls find out you have money, they just swarm on you. SPY went to 114, 116. That would have been 160 bucks. We're at the 200. And the video on the 5-minute has 3 black crows and a hammer. On the 5-minute at open. Ooh, that just dropped to $1. The question is, are we going to hold? We got a head and shoulders. Kind of hard to say. Could drop. It could drop. There it goes, it dropped. Okay. SPY, where are we? We're at $1. The 646s. Come on, Nivea. You must not have been talking too highly about it today. Tempting to just grab one more because it keeps holding support. I'm not gotten to my $50 yet. Go for it. 370. Let's see if I got it right. I got two of them, one at 410 and one at 370, average 390. There goes the SPY. At $1 to 106. I don't feel too optimistic for some reason. We got a double bottom on it. God, how'd that happen? Double bottom, higher low. SPY's at 112 now. We're almost to the 200, so exit from $1 to 112. I'm at even on my NVIDIA. $118, bingo. I'm up $10 on my NVIDIA. We hit the 200 on the /ES with 3 white soldiers. You're a racist. Labor Day, baby. Oh, yeah, let's break the 21. We're squeezing between the 9 and the 21. Meta have 745.79. Pre-existing trend line. Ugh. If I was nervous, I'd get out of this trade, but I'm still holding on to it. Come on, you beach. May circle being broken. We're at 405. Like me. Do-do-do. Who is that? Is that Elvis? Thank you very much. I'm Elvis' son. Would anybody like to join the Elvis Son Club? Spies at 115. Microsoft. Someone put a chart in here of Microsoft yesterday. I liked it. Fallen wedge. Bill Gates meets Trump to discuss global health programs. I want Bill Gates out of my life. Warning, U.S. aid cuts could kill millions of children. He's so full of crap. Microsoft probes protesting employees over allegations Azure was used for surveillance in Gaza. We're definitely hovering at a resistance level on the SPX, on the /ES. On all 4 time frames. Anybody want to see my pretty face on YouTube? Here I am. Somebody fishing? We just now broke the orb. We just now broke the orb. We just now broke the orb. Spies are now at 121. The 646s. I'm at 410. I'm up $40 on the video. So we had a little crack. It still didn't break resistance, but I need a body above it. When that body kind of just breaches above it, so next time up, we have a 1, 2, 3 on the 1 minute on /ES. Pay attention. Randy. Honey, I can't pay attention. I'm too stoned. You're making it difficult for Bobo here. I'm tempted to just sell these suckers and get out of them so I won't have to watch it all day. I got to break 180.58 for NVIDIA. If we break that, I should get $50 a contract. What's Mr. doing? Mr's pulled back to support 343.93 is what I got. SPY's at 116 from 104, just pulled back there and bounced back up. We had a 1-2, almost a 1-2-3 on the SPX. We got a rising wedge. So now we're above the orb. Did anybody have the balls to take the video with Bobo? And some of you ladies, I know you don't have balls, but I don't know what. How would I refer that to a lady? It's got to be sophisticated. We just now broke resistance on the /ES on the 1 minute. Randy's saying, whoop. We're at 415. $420, Randy. So YouTubers, I got 2 different pouches. I got a leather water resistance pouch, zipper water resistant, so water shouldn't get in them zippers. And then I got a regular old work. I put my wallet and my headphones, my phone in this one. This is the one I would be taking with me. It's a little bigger. I can put more stuff in it. Damn. Not much going on here so far. SPY just keeps moving up a little bit higher. I think we're about ready to squeeze again. They're now at 129. And I sold some at 118. And I have a few here. 5. Come on. Let's get to 150. I appreciate that. Yesterday I sold them too early and God, I could have made a killing. At my original price. I'm still in the video. I'm up $60 on them. We're at the 63, so if this breaks, could be a stepping stone to run to the 200. Maybe even squeeze between the 200s. The EMA and the SMA. And this is a 63. My name's James Howard. I own Always Clean Janitorial Service. I was the owner of Picture Frames Plus. Plus, I had the Perry's Kool-Aid stand when I was 8 years old. And I sold worms when I lived in Oregon. I had 3 prostitutes working under me at one time. I'm also a pimp for 5 years. Taylor Swift and Travis Kelce have reportedly been secretly engaged for longer than you think. NVIDIA is at 425. Does the market need a boost, or are they just got this priced in? The earnings, we're up like, what, it took forever to break 150, and we're at 185 here for a while. That's my question. Are we going to run up and hit the top of the orb today? Make $100 a contract? That's my next question. And my third question is, do you think the Democrats are mad because Trump selling chips to China? Well, there you go. I think I'm going to take some profit here on the SPY. We're at 139. All out at 136. NVIDIA's at 430. I'm up $80. Be nice to get this to 181. Can we do it? The question's been asked. 182 would be a very nice gift. I'll get it my 450 and I'll get my 120 bucks out of the trade. I say continue with it. Washboardjim does not mess around. I'm going to get a good grade for this trade. I already got an A+. Am I right? Or am I right? You're 100% right, James. Come on, give me 450. If you give me 450, I promise I'll sing you a song. Woo! God darn it! Oh no, I don't even want to look. 152, 55, there they go. Ladies and gentlemen, we're about to hit resistance on the SPX. Dadgummit. That pisses me off. Whew. Never fails. Holy smoly. Holy smoly. Okay. We're at 440. I cooked burgers in restaurants for years. This rule breaking trick still shocks me. And then you know what it is? I think you don't squeeze your burger. Cooking burgers straight from frozen isn't just convenient. Oh. It's backed by science. This technique delivers juicier interiors, better crust, and fewer flare-ups when you're grilling in the backyard or searing on a stovetop. I always thought you never smashed your burger. That creates a juicy burger. I admit I raised an eyebrow when I heard Modern Cuisine, something culinary, and Chris Young suggests you can cook burgers directly from frozen. Maybe I should give that a shot. I've never cooked, well, I have cooked frozen, well, it reminds me of a song I wrote. I got a booger in my nose, won't you pick it? So cook a frozen burger. I might try that next time. Make a bunch of patties and put them in the freezer. When you start frozen, the center of the burger takes longer to heat up. That delay postpones the moisture squeezing phase. I don't squeeze it. Come on, let's get up to that 200 EMA. You can do it, NVIDIA. Don't give up yet. Son of a bitch. Tesla reversed. $3. AMD reversed. I'm still holding on. I'm a tough guy. I'll stick this out. AMD pulled back to a double bottom, a 1, 2, 3 for them. NVIDIA is at the 21 on the 1 minute. So this is the pullback. We have a triple top. 1 bis, 2 bis, 3B. We're squeezing between the 21 and the 9, and the 9's above the 21. Figured we'd be piling on this thing, but get up to the 200 so I can get my $50. Put on my shoes. Oh, where's my slippers? Where'd they go? Oh. I just had them suckers. There they are. NVIDIA, Alibaba, CrowdStrike, Snowflake, inflation, and more to watch this week by Barron's. You know, I get sick and tired of hearing about this inflation. Are we going to create a new high here, ladies and gentlemen? Oh, new high, /ES. God darn it. I bet these things are really up there now. 162. So I'd have had $620 if I'd have held them. On the SPY. And I'm going to draw the resistance line to break on my NVIDIA. $181.50. I have no cheese to make cheese chips with my soup. No chips. I can have soup and the rest of that cucumber, I guess. Gosh sake, man, come on. Let's get, there we go. 180, 150. Don't get scared. Oh God, this Ralph Lauren, Polo Ralph Lauren hoodie for $58. I figure it's going to give up pretty soon if we don't do it. AMD pulled back. Got a new high on Apple. I was just waiting for this thing to hit 450. There's 440. I can get out of it right now and be up $100. What to do? Today's loser is Baidu, Hims, Shop. Kroger's laying off 1,000 executives. Boeing's down a couple of bucks. I thought I saw something here up $10. SPX. We're now at 440 on my calls. Come on. You can do it. We're at the top of the Bollinger Band, or the Kettner channel. Cloud. CrowdStrike had a good day. Lulu doing good. Yeah, I think I'm gonna go get something to eat and hold on to these a little longer. It'd be nice to see these things at $5. We're going to see if we're going to find out if this thing wants to break out or hold. I'm in a day trade. It's at resistance. Should I go ahead and sell it now? It's playing with my head like that girl last night did. We're at the top of the Kettner channel. Can you count to 4? 1, 2, 3, this getting channel. I might take it to 5. Can we break the 200 EMA? Oh, brother, we're pulling back. Chicken shits. Another hit record. Michelle. SPX knife. Michelle. Spank. I'm at 440. Here we go. See, my music helps. Say you're sorry. Apologize. I'd get out at 4:45. I will, Parge. There's 450. Congratulations, Washboardjim. You made it to the 200. Should I sell it? Magnificent? Yes or no? Yes or no? Oh, it's so pretty. That is, you know, don't that looks beautiful? Jim, you got big balls. Bigger than Randy's. That's not very nice, Jim. I'm out at 450. Yeah, oh yeah. She just sat there so long, I had to get out. Washboardjim, my mother wants to go out with you. Sorry, I can't. No, I can't. I'm so proud of that trade. We're at a triple top here on SPX. Okay, I'm gonna go do my soup and I'll be right back. God, CNBC, you suck.
Onto every word. Really the big question that's been in focus has been, as far as margins, demand, guidance. It could spark a big market move, given what they say about all those things. But yes, it's fascinating as far as what we've seen, as far as the pricing in the positioning ahead of this earnings report. Because if you take a look at the yield steepening, Nicole, off the back of what some have called the Trumpification of the Fed and some of the concerns, particularly on the long end, about the risk to sort of longer-term inflation, despite what happens in September. I mean, typically with a 10-year ticking up, you would see a little bit of pressure on stocks, but it does very much seem like, the equities, the markets are taking somewhat the Trump v. Fed scenario and all the drama there a bit in their stride at the moment. It does very much seem like there's two stories going on in the market right now, with this sort of prevailing rate-cutting bias that's being priced in, and also, the AI story, which continues to drive the momentum, particularly around tech.
And of course we know China, as you noted, is looking to triple its output of AI chips. So it's the battle of the AI arms race that has not stopped. And I will say most of the Mag 7 names today are in the green. I saw Apple is going to distribute curated radio stations in a deal because they've been losing some ground to Spotify. But the big picture is most of these Mag 7 names are in the green. And many of the earnings this week, over the last 24 hours, MongoDB is up 30%. Okta is up 3%. We're watching other names, obviously, that are in the news here, and we have more after the bell. We have not only NVIDIA, but Snowflake and CrowdStrike. So some of these names are also key, but Mag 7 doing well today. George?
Yeah, definitely. I mean, I think what's happening now is we're starting to see the market broaden out better in terms of the more interest rate and also the dollar-sensitive areas of the market. So I mean the small caps, or I'm referring to the small caps. So I think that's an area of interest right now, maybe from a valuation standpoint, but also from an interest rate, and perhaps if the dollar starts to firm up, they'll actually benefit as well, since they are as a group more import sensitive. So I think obviously the Mag 7 is carrying this market. It has been this entire time, particularly since the April lows. We start to see other areas, like I said, in particular the small caps, start to outperform. That might be indicative of a healthier market participation across the board. But nonetheless, very important earnings today. We're starting to see some of the, I guess, underperformers, laggards in the data center space, and of course the data technology stack like MongoDB. We'll see if Snowflake also starts to participate. These are a couple of names that were concerning from a value standpoint. But we did see, of course, Mongo, which is close to break even, at least on a GAAP profit basis I talked about yesterday, is once you get to that level where you're getting close to break even, you do see some of these outsized moves, and it was a pretty big move for Mongo to be DB today, up over 31%.
Well, thank you both, and of course we'll continue to follow the story pertaining to Federal Reserve Governor Lisa Cook. We have Kevin Hassett saying the honorable thing to do is to take leave. You have Scott Bessent saying that He's pushing for an internal investigation into the Fed, so this is an ongoing story as well, as we do see the likelihood of a Fed rate cut in September at around 90%. Sam Bottas, George Sillis, great to see you both. And folks, right now we're seeing markets here with some up arrows. Thanks for being with me. I'm Nicole Petalides every single day, 9 a.m. and 2 p.m. here on Schwab Network. Trading 360 with Diane King Hall next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account.
Oh my gosh,
you can manage your
470?
checking and investing in one convenient
Never mind.
location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop
That was hot.
and start investing in stocks, bonds, money market funds,
Yeah.
and more. Get more with Schwab Bank.
He's gonna
Investor
go
Checking,
5.
The checking account built for investors.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Dad, I got a question for you. How come Grandpa doesn't sleep with me anymore?
He worked hard, and after he passed away.
Well, he slept hard for a while, and after he got old, he lost his heart. So that's why he's not sleeping with you, darling. My turn.
Morning movers, be the first to find out what's shaping early market.
So should Jimmy jump back and he just left $40 on the table? I'm not going to do it. Had a double bottom on AMD, and it bounced up. UNH is getting in trouble. SPY has a triple top. One of them 2-bits 3B. And double top here. Are we going to get a new high on /ES? This is also good too, this soup. A little bit more soupier. The other one was kind of mushier. Kind of taking its sweet time. The calls have dropped on the NVIDIA. 435. This is really good too. It's a little more soupier. I like that. I added a little more corn broth, chicken broth. Yeah, I give it a good 10. Randy, tell your wife I make the best soup in town. Tell her I'll come over if you're not around. Man, that's good. I could almost have another bowl of it. Jimmy's not in a big hurry today because I think the market's waiting for NVIDIA. So professional.
Additionally, poses a little bit of a reason for the market to pause. 56% of the time, September is lower. So,
oh God, here they go again.
In September is something that emotionally can prepare an investor to weather the storm of potentially a financial winter.
I feel like we're talking Farmer's Almanac here, which I was checking recently because the chill is in the air here, and I feel like summer is ending too soon. And, you know, the Bulls wouldn't like to hear that about summer potentially ending sooner rather than later. But look, like you make a great point about the patterns in September. So when you think about that and the warning about a potential financial winter, is that just a bumpy period in terms of the seasonal kind of September, maybe a little bit of spillover into October?
I think it is. I think that we see investors starting to wake up to the fact that some of these stocks, specifically AI stocks that have been...
This is what I wrote back in September.
Today, retail traders and senior day traders back. What I'm seeing on this chart is a little bullish or a little bearish. So I got a little tune I'm going to sing kind of as we go here. In one hell of a September, one I will always remember. Let's break
Out of the snake. 365.74, almost up 100%.
It's been fun
For heaven's sakes.
Well, we've got to break that 368.09. Pay close attention to that blue line. The lowest support I want to hold. 362.41 of September will be a month I will always remember. There's so much chaos going on.
Yeah, what a hit record.
The S&P 500 is concentrated in those top 10 companies, and most of those, except maybe Berkshire Hathaway, are AI-led companies. So this AI trend is going to either make the market move higher or lower. To your point, I think we're in the...
That's one thing about Buffett. He never did really like the trends.
See some strikes along the way. The early innings...
He missed the dot-com era.
The early innings of the game.
He missed the EV run. Got in late.
And overexposure to those AI names could leave investors feeling as if they're going to lose all of their money.
He missed something else too.
Big pullbacks.
Okay.
Definitely the AI.
Focus today is on NVIDIA for good reason, but there's a member of the Mag 7 that you've been paying attention to. It's lagged year to date. You're still bullish on it though. We're talking Apple. So
New high on SPX.
Do you see it going? What makes you confident in it now, especially given that it's lagged the rest of the group?
Sure, and that's one of the reasons that we are as confident as we are. We've bought Apple for quite a while in this lagging period of time. It's been range bound for quite some time, and Apple is one that has been late to the game with AI, which is one of the reasons it's lagged so much. In addition to its China trade confusion and whether or not it can open up the businesses that it desires in China, and all of the China trade has also caused a little bit of short-term volatility, but AI has not yet been something we can champion at Apple when they make the move. And they've been late to the game, no doubt, but they have the brand power to do that. They have waited it out to see which would be the best option to go. In our opinion, when Apple picks their AI platform to operate on and they enhance that, I think today I heard that they were announcing a new iPhone sometime in September. This is going to spur optimism in that stock.
Okay, and let's talk about another kind of an NVIDIA offshoot, if you will, CoreWeave, right? NVIDIA's a big investor there. You compare it to an early stage NVIDIA story. The stock has had a significant run since coming to the public markets. The past month has been bumpy.
It's
for
been
this
terrible.
one. Yeah.
I mean, just use the word. It's
Yeah.
terrible. The last month has not been a time to have bought at the top, right? It went up to $180 a share. We were big buyers at 75. We bought a little bit more at 100. We actually trimmed a little bit of our position at 150, and we've held it all the way down. The position that we still held, we've held all the way down, and we were buying in the 80s and 90s again.
Okay.
And we're big time believers in the long-term value of CoreWeave. At this point, though, CoreWeave is unique because it also gives us that type of price action we like to see if we're trading stocks. If we're doing swing trades, you can make some serious money in CoreWeave. Long term, I think that it is a good place to buy anything under $100 a share, and you better do it quick because I think when NVIDIA posts its earnings, we could see a substantial amount of price action in that stock, likely to the high side.
Okay. I want to ask you about some equal weighted strategies. This is something that you pay attention to. You talk about investors who can't afford a big setback, especially I suppose if you put in the context of a potential financial future. How do you approach that?
Yeah, and Diane, I want to be very clear. I am bullish on the market.
We got a head and shoulders.
The S&P 500. I think it ends the year positive. But I do see us having this period of volatility. And so one of the ways that we're weathering the storm with our clients, because our clients have worked hard to get to where they are, and they can't afford these substantial setbacks. And the last thing we would want them to do emotionally is to sell at the bottom of a normal 10% sell-off, because that's typical in a given year, from peak to trough.
At the 63.
We've seen some of that in early August, a little bit of a sell-off
on SPY.
So how we're weathering that, how we're kind of playing
gasoline
games,
inventories
cash, which I think is a bad
is down.
You can't time the market, and we are early in the innings of the AI trade. We moved to an equal weighted position because we had talked about the concentration at the top of the S&P 500. Let's broaden it out, and if the market becomes a more broad market, we benefit. If the market continues to climb higher because of AI, we still have exposure. And in the time that we see that setback from these AI names that we like, Google perhaps, Microsoft, if we see a pullback, then we buy the name. We move from the index to the name. So we're talking about moving to an index now with the earnings, especially any of the profit that you have on the table. Take some of that off, put it into this equal weighted exposure, and you'll see that you have an opportunity to buy those names at a more valued, friendly position.
Okay, all right, Dale, we'll leave our conversation here for today. Appreciate it. That's Dale Smothers, President and CEO of RDS Wealth Management. Our thanks to Dale. Plenty more to come here on Trading 360. Next up, it's the big three: 3 stocks, 3 charts, and 3 trades. Kevin Green goes through the technicals, and Don Kaufman of Deal Trade takes us through the trades. On this list today, Bank of America, the Silver ETF, and eBay. That's next on Trading 360 here on Schwab Network.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Hey, Dad. I have a question for you.
Oh, God.
Sure.
When did Grant...
I don't want to listen to what your grandpa did to you last night. Look at that guy. Evil. I think I'm going to clean this chart up. See what else we got on here. We definitely got a head and shoulders right there. Grandpa, how come, Grandpa? I miss my grandpa. So I got 3 supports. The orb. And it's kind of a tough one to call here. Well, no, let me see. I got a line. Got a yin yang. Yeah, right there. A little under the orb. And the orb. Those are my choices for the pullback. Double bottom, orb, double bottom, orb, and then 1, 2, 3, 4. That's right above the 200 EMA. What's NVIDIA at? May I ask once? $4.40. $4.35. Well, kind of bored right now. Might go to the tannin booth. I should be real dark by the time I get back from Punta Cana. I think I'm going to like this resort after all. I was kind of questioning it. Some people, when they go to a resort, their expectations are real high, or they're... I went to one in Jamaica that 2015. Yeah. No? Yeah. There was a small, petite one that, you know, I'll show you the room. And it's not open no more. And I had a ball.
Cheez-It craves can happen anywhere. So eat Cheez-It crackers
10 years
every
ago.
weekend.
All right.
Here is my room as a Grand Pineapple Resort. One king-size bed.
You look back there. There's a joint right there by my camera.
One king-size bed. As we go to the door, we peek in the room. My coffee pot. My outside view. My desk next to my bed. Big king size, some artwork I bought. And there's my phone and information. Walk around to the bathroom. Nice shower, bathroom. Yabba dabba doo, getting a good tan going. There's my safe. My closet space. And another picture of me in the mirror.
Got my lighter in my hand.
Yes. And what money I have left.
What money I have left.
And back to the outside. I want to show you a look at this little view. I just think it's kind of cute. I'll point that one out and that one out. Well, that's this part of the segment. I just wanted to show you where I was living at. Pool's back there. And there's the Grand Pineapple Resort.
I'm in the 6 foot, 7 foot, 8 foot, and I alright, we talk banana till morning, and I talk one more time. We talk banana till the morning, and I talk
Perfect. Perfect for it.
All right, man. Oh man, that touches the 200 right there. That'd be a good spot for it to stay bullish. Yeah, man. I've had people tell me they've got in trouble in Punta Cana and robbed. And so I'll probably stay on the resort. That woman got killed there last year. Tourist. I can't keep it off my mind. I'm really ready. Jimmy, we're at the 63 and the 50 SMA. We're at the yin yang for support on the SPX. For it to stay bullish, we got to hold this number, right, Randy? Say yes. I mean on the /ES. We got the 63. So we could drop another $1.80. But we're definitely at support. We could drop a little more. Not much. Prepare ye in the name of the Lord. And after this, I'm going to go get my tan on. $64.85s. Yep. That or even the 80s. You can get 5 at 2, get 3 of the 6480s or 5 of the 6485s. I'm going to go for the 80s. $3.50. Right off my support. Come on, you idiot. I have 3 contracts of the 6480s at $3.50. And I'm going to type in off the trend line and 63. And we're back down to 350. God darn. Got a hold. I could have got out at $4. Ooh. Needed to hold that. Now we're still kind of bearish, but if we can break this, that's kind of a telling me that we could have a double bottom. $360. There's 390. Come on, shoot it up. Taking profit on PLTR. Haven't even looked at that lately. I wonder what that is. Monday on the 9th and the 8th. Okay, we're at $4. Are we gonna break, Randy? We got a two-headed snake. I should have added on a little bit right there, and that really would have done it up. 420. Let's take it. Woo-hoo! $4.50. Thank you very much. I just made $300. What do you think about that? What do you think about that? Thank you, Leaf. Oh, I missed that dip there. Did you get out, Randy? Jimmy got out at 4:50, and I wanna go home. Jimmy's getting ready to go to the tanning booth. I don't want to burn when I get there, so I'm going to see how this works. My trip to Jamaica, I let my ex-girlfriend babysit my dog, and I got home. I had a beautiful tan. I mean, just beautiful. I was so proud of it. So I grabbed my dog and held him and hugged on him and took him home, and woke up the next morning and I caught poison ivy. I was so pissed off. So whatever you do, you leave your dog with somebody and come back, don't be hugging and holding on him. Give him a bath first. My arms are all poison ivied up. Oh, shit. I was so mad. But I couldn't do nothing. I mean, she babysitted my dog. Best dog I ever had. What's going on here? He's a damn good dog. Smart. God. Never barked. I haven't had a dog since. I don't know if I'll ever have another one. There it goes. 460. Shoot. Not too many people in here today. New high. $5. Can you imagine that? That's left $150 on the table. No, I left more than that. No, I left 150. What did I just do? What did I just do? What did I put that on? Oh, okay. Whew. I'm gonna drink this tea and then I'm gonna go do my thing. Should take no more than a half hour. There's NVIDIA. Microsoft's holding up. There's $40 right there. That's just a little bitty move. $430 to $470. Right now, 181.80 has to hold for it to stay bullish, and that's off the 63. We bounced, and we hit the 200, so it can drop to 181.50. We're squeezing right now. We're going to know something real soon. God, there it goes. $5. So pleased I forgot to put on my apron today. back down. Here's support. This has to hold to stay bullish. I'd like to be around when we come down and touch this. Boom.
Welcome to Verizon Wireless. Your call cannot be completed as dialed. Please check the number and dial again. Announcement 4. Welcome to Verizon Wireless. Your call cannot be completed as dialed. Please check the number and dial again. Announcement 4.
It should have worked. Oh, shit.
Is not available. The mailbox is full and cannot accept any messages at this time. Goodbye.
Coming back to the 63 here. I'm going to wait. We could have another scalp here, 410, 430. I'm just being very extra cautious today.
Yeah, my name's Jim Howard, and I'm going to Punta Cana Princess, and all adults only in Punta Cana. And I was wanting to know about the spa. You know, do they charge for the spa there, and how much is it? Okay. And yeah, let me get my pen out. Excuse me. Yeah. Yes. I found it on the website. One more time, please. Yeah. 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 And are we allowed to go on the sister properties from that resort, you know? Excuse me? The Caribe and the other resorts that are Princess. And I'll have access to them. Okay, thank you very much. great day, ma'am.
SPX popped. Oh, one of these long days. We have the 1, 2, 3. I think he's just waiting for NVIDIA. NVIDIA faces growing threat of China. Oh, that's NVIDIA. I don't want to look at NVIDIA. SPX. We're now at the 63. $3.90 for the 6480s. I'm not in them. Gonna get ready to leave. I just don't feel like I want to rush today. Get stuck. We got a 1, 2, 3. Right there. Symmetrical flag. Huh. 360. $330. Still waiting. Oh God, really? What's wrong with people, man? People should have the freedom to study their own religion. And he ends up idiot, ends up shooting himself. Oh, here we go with the pullback. Might take a trade before I leave. We got the 200 coming down. Let me see my calls. Where? I'm gonna stay with the same ones. We're definitely at my first support. I just now noticed I was watching this. I'd like to see it get down in here, but man, this is a good spot. Yep, there it is. $2.50. $2.55 for my first entry. These are the 6480s at 255. Damn. Just now hit my second support. Down to my third support. This is not looking too good. I knew we were going to pull back, but this is definitely a pivot point area. Should have grabbed 3 more at $2. That'd been 225, 228. Oh well. I was gonna see if we'd hit that 64, 68. Back to 240 right now. Back to even, close. Dang it. This could have been a good spot to add, that's for sure. No, might get out even. Boom. There's my other support. That's the pivot point. If not, we could end up back down here. Always clean as Jim.
Hi, this is George with Senior Care Services. How are you doing?
Oh, I'm stressing out right now.
I'm reaching out because our residents you might be eligible for special state regulated offers. May I confirm how old you are?
I'm old enough. How old are you? I'm old enough. Hit a double bottom on the orb with a higher low, snake breakout pullback. Let's go. We're at the 21 right now. We got like a couple of resistance. We got the 21 and we got the 200. Well, we're going to find out if we're going to break this or not. Snake breakout, pullback, higher low, boom. We're at the 200, so that's a hard resistance. There's really nothing in its way. Ready, set, go. Hit a triple top. We come down and touch that bottom one more time. If that doesn't hold, then we're tanking. Oh. God, these alerts are coming in. These are the spies. Break it. We're at a hard wall right here. This is number 4. There's 165. I think the other ones are easy to break. The hard wall was right here. Come on, let's go. I've been doing good about staying in longer and stuff. We're at 285. Yeah, vanish all 3 of them. Because some people fall for it. As long as it ain't me. If I'm not on here, then you know you vanished me. They've been vanished. I'm still here. I'm here, Jake Paul. I'm happy. 320, there they go. Bye-bye. Yippee-yi-yi. Yippee-yi-yo. Ghost riders in the sky. I think I got it down now. I love that song. I can play it. That's what's good about it. Oh boy, that was cool. That was nice. Whew. Yeah, I'm still here. Yes. I'm just in a situation. I'm getting ready to leave. It's hard for me to say no. I mean, I've been helping so many people out. I got one that just constantly wants more. I just got to say no. I mean, I can imagine what it'd be like to be filthy rich and let everybody know it. That's the way I see it. But I ain't got the courage to say that. Rosie O'Donnell says getting Botox was a huge mistake. I don't know why people just won't leave their face alone. I used to kind of like her, but she kind of turned nutty. I went out of my way and helped this lady out, and God, I think it was the biggest mistake I ever made. I get anxiety when I keep pawning at me. Then they get mad. SPX is at resistance. There's a beautiful call right here, and then it pulls back at the old resistance where we broke out the number 4. Now we're double topping. And we got the new number 4 right here, which means this could run up to this next line, which is that triple bottom. So we could get back up to triple top. Counting that wick. $64, $80, $47. If we break this head and shoulders. And there's another one. I mean, this chart's pretty today. You can about call every trade out. Look at that. This previous high right here. Look where it went. Stopped right there. That's called a yin yang. What was resistance now becomes support. Triple bottom. Drama. Breaks out. Hits the 200. Pulls back. Called the snake out. High or low. Run it all the way up to here. Now it's pulled back to the previous resistance. This number 4, just shy of it. Now if this breaks, it's an automatic run to 64, 80, 50, 47. If it breaks here, okay, we're going to know any second. It looks like it wants to. Stupid didn't get back in it on the dip. I wish I would have. It's occupied. It wants to do it. I'm debating on getting back in it, but got a couple inverted hammers right here, which is kind of bearish. I feel like I need to go get this thing done. Go get my tan on. And buy the big Powerball ticket. Small little pullback here. Patience has paid off. On what one? What stock? What he's got? Yes, it's a rising wedge. It could be an ascending triangle if I do it with my bodies of the candle. Let me see, /ES, what time frame is that? 1 minute. It's just barely a rising wedge. Barely. This one candle right here. It's barely one. It is. It could be both, easily. And I would say that the ascending triangle is more powerful. Yep. And it's getting that time of day too. Then we might have the NVIDIA into earnings run. NVIDIA is the big deal today. And I think we got a few good ones today. It's a symmetrical flag on NVIDIA. No, it's a, yeah, it's a it's symmetrical. Everything's barely today. That's definitely a downtrend. We're squeezing. Got a building that got flooded out. We've had a lot of rain this year. I mean, a ton. And I got this one job I'm going to show you here. And I'm talking to the owner of the building. So we've had so much rain that back here, besides this, and back on the back door back through here, the water just seeps in, and it's infested. it's infested this whole area. So they've got construction workers going to go in there and redo the foundation to try to get it. Because I mean, we had a lot of rain, and it's done this before, but this year we had like 42 inches in 2 months of rain, which is just very unusual. I mean, just buckets and mass floods, and so it got mold in this here part right here, and it's all coming up from this foundation. So they got people coming in to do the construction work to try to fix that, eliminate that problem. But I mean, we had a ton of rain. She squeezed. NVIDIA did. That means SPY probably did, and SPX probably did too. No, we're still in the... SPX has a rising wedge. Definitely a rising wedge. Not by much. Like I said, not by much. See, a lot of rising wedges. Depends on what's going on. Even, I mean, just the SPX, just barely. But I'd almost call that an ascending triangle. But on this one here, it's just up just a little. If I put a price line on the body right there, you can see that it's just up, I mean, just a hair. So it could be either way. And they're both powerful. But a rising wedge can go either way. Where they all can. They all can go in either way. Depends on where it is. Like, that's a steep rising wedge. It breaks out and it comes back down and pulls back to support. But this is so flat that it's more powerful than something like this. I mean, it's just within pinch, a couple of hairs of being an ascending triangle. And I love the fallen wedges because they do just the opposite, right? But when you get that close, because these all got a pretty good rise on them. And when you're coming up from it, from the bottom, I think it's when you're going up, they have a tendency of breaking out, and when you're going down, they have a tendency of breaking out. But this one here has a tendency of going up, and it's in that sweet spot. So if it doesn't break out, if it does, it comes back and retests top of that there wedge. And if that doesn't hold, it has a pretty good chance of tanking down. But that's the sweet spot for right here. You know, you got 1, 2, 3, didn't break out, came back down to number 4, and then drop. If it started to move up, this could possibly break out. But that's your sweet spots. 1, 2, 3, 4. 1, 2, 3, 4. So it came back down and dropped. That's where I come up with that 1, 2, 3. I kept seeing 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, and then they always did something there. True with almost any kind of pattern. Here's one coming from a downtrend, and that's bearish. The same way with this one here, coming up from an uptrend and still bearish. So, you know, you have the odds are a lot less on a, but this one's almost straight across, just a little bit up, which means it's more powerful to break out to the upside. See, right there, we just pulled that wick. There she goes. Hope I explained that good enough. See, the SPX is almost straight across. So that is a powerful. $3.50. Not moving much. I got our next resistance on the SPX. We got a double. Okay, we got a triple top coming up. Now, a double top, that body's just a little bit lower, but the wick has hit it. So I'm going to call that a triple top at 64.80.47. Or you could take this and go to that body right there, run it up to that body, and you have a new resistance here. Two different ones. You got this one, which was a triple bottom, then the double top, triple top at 64.80, and then it could run all the way up to 64.83. Either one of them, 64.82 to 83. If we break to 64.80.47, I kind of want to stick around and wait till after the bell rings, go get that tan going. I went into this shopping center the other day. I always look at the doors if I'm going into the restaurant. I don't understand why restaurants don't take the time out to clean their damn doors or their sidewalk. I mean, when I had my frame shop, I swept that sidewalk once a week, every Saturday. And the jobs I do now, I sweep the sidewalk. But even when I had my frame shop, I still swept the sidewalk and cleaned the windows. I just don't understand why business owners don't take that time out and make that appearance look nice. So I'm thinking about getting a big contract for my nephew. Sweep this whole shopping center for $1,000. I mean, I don't like going in a restaurant that has dirty windows. Door, especially the door. I always look at the doors, you know, if they're filthy. Yeah, I think I do. Yeah, I do. I remember Trump talking about that. That's probably what got in my brain. I think you just mentioned that a little bit ago. That's probably why I keep thinking about it. Because I went in that shopping center and I said, God, every one of these doors up through here. And I was reluctant to go eat at one of them, but I did. I went through all of them and I said, well, that had the cleanest doors, so I think I'll eat here. Especially these Asian restaurants around here. Boom, here it is. We're going to find out. We just hit it. Right to the penny. We'll see how tough this thing is today. Boom! There. See where that body is? Neither one of them broke it. That is perfect. I mean, the wick. But if I was in that trade, I'd have got out definitely up that resistance level or scaled out. Because now you have the possibility of pulling back. That's tweezer top. Oh. Oh. It's trying. Having a hard time breaking it. Okay. Okay, we're squeezing again between on the video between the 21 and the 9. The 9's above the 21 means we're still bullish. That's the way I've been reading it. No, maybe not. Where in the hell am I here? We're above the 9. What the heck? Yeah, let's move this sucker over here. That was NVIDIA. I'll be right back. I'm gonna wait until What'd you do with it? We broke. $3.90. Yep, hers. So the SPX has a, you could look at it like this. I'll use that one. Where was the fuck? Oh, that's Lulu. So it didn't look like the same chart. Your low support's going to be at 64.80 to hold. To stay bullish. Three of them. Right here, it should bounce. Has to hold this or it's a good drop. Back down to the 63. Kind of afraid to buy into it. It's still bullish because you're above the 9's above the 21. That'd been $60. $4. New high. It's now 1 o'clock. This is when I get in trouble. Woo! Is smaller than the other for every day at work. The other ones carry stuff if I'm on a longer trip or I'm not at work. I put more stuff in the other one, in the bigger one. The one on top has a water-resistant zipper. Okay, this is the last chance. It's do or die right now. Right when I said it, this is the time where I get in trouble. Look at what's happening. So if we don't hold the 21, Putsville. $64.75s. Here we go. Just said do or die. Why did I say that? And this still just might be an overreaction. Because we have a triple bottom. And we can only, go on for so long. It's a rising wedge that I talked about. We almost hit the top of that rising wedge. These puts ain't paying. I'm just paper trading them. I'm not in it. There. Now I wish it kind of was. No, they're still not moving. We're at the 50. NVIDIA has 123 million in volume. It's definitely the big leader. Intel still has, Trump news. Tesla's flat at minus 54 cents. Boom shakalaka. Right off the 50. I started using that 50 more often now. See how we bounced over here off the 50? SMA. And we did it again right here. So that's why I was counting on that 50. One thing I've learned here in the last, maybe a year or a little less than a year, or maybe a year, is I'm looking at the moving averages and I'm seeing which one it respects the most. And then I can kind of use that moving average as a support, a stronger support, if that makes any sense. It does to me. And then you got the 9, which is still above the 21. You heard me say we're still bullish as long as we stay above that 21. And if it was below the 21, so you're above the 21, we bounced. You're above the 21, we bounced. You're above the 21 right here, and we're still up above it. If the 21 goes below the 9, if the 9 goes below the 21, then you could expect a bigger drop. And we were real close here. These are EMAs. The 9 and the 21 are EMAs. As long as you stay above the 9, you're still bullish. I'll be right back. Boom. Oh boy. $6 for the 6480s. Make it 710. Here's your new resistance right here. We just broke above it. Got near an 860. I want to check something out. Be right back. Man, I love the smell of leather. I got my new fanny pack in yesterday. Got 2 of them now. Got 7 zippers on this baby. I think this is the one I'm going to take with me. So I'm putting more stuff in it. And my cell phone fits better. The other one's kind of tight. So I can store my little sweet treats when I'm on the plane. I don't know, this vacation's a little bit different than all the other ones. I'm more excited about it. So I hope I don't build my expectations up too high. Oh, my screen's not live? Well, shit. How'd that happen? I've been talking about these chart patterns, pointing them out, and it hasn't been live. Thank you, Randy. How long's a bit? Wonder how that happened. $15 to 20 minutes. Woo! Jeez. Oh boy. Double top. It is now 2:26. There's Miss Pepitini.
And folks have been very optimistic, and they keep raising and raising. You know, at what point do we say NVIDIA is fairly valued, or does it still have room to run? What do you think we're going to hear on this earnings report?
Miguel, you're definitely right. There's got a little bit more room to run here. They've had potentially 9 straight quarters of beat and raise. The street's expecting $46 billion in revenue, and what we've seen is they've beaten and raised 8 quarters in a row. So revenue is expected to be up 53% year over
Triple top ascending triangle in the minute.
And of course, the stock's been up about 24%
SPX.
in 2025.
You ready?
13%
New high
in the last 5 years. But here's where the demand's coming, and this is the question I was asking. 6 out of the Mag 7 each are spending anywhere between 80 to 100 billion in terms of capital expenditures in the next 12 months. That is a huge order book, but it's also very concentrated. We also have what we call Ray's Law, because intelligence is doubling every 7 months now, creating massive demand in AI. And that growth, along with what's happening next in sovereign and physical AI, are all the areas where we see future growth opportunities.
They were talking about some kind of AI thing that
and of course, NVIDIA's going to dictate
kill
how
himself.
people perceive that future of AI.
And you're waiting on more details pertaining to Blackwell, right?
A suicide deal.
We are. We want to know what the Blackwell numbers are like. We're also looking at Blackwell Ultra orders.
648693 needs to gain respect.
The GPU production is booked for the year, so everybody wants to know what's happening out in a year out.
Another ascending
and of
triangle.
Course, there might be some headwinds on China.
China.
And when we think about NVIDIA and all the other competitors?
China.
Do you still feel like NVIDIA and Jensen Huang's leadership just makes NVIDIA chips and what each chip provides, the language and stuff, all the things that are in an NVIDIA chip are not like any other chip? Is there something super special in your mind about NVIDIA chips?
There are, right? It's the partnership with TSMC. They've been great partners, and what we've seen is the multi-die technology come into place.
This guy sounds excited about it.
Into the chips, making them very powerful. Jensen has a private 10-year roadmap, and the moats are huge from how they allocate chips to their investment in their ecosystem. They've done really well by doing this, and more importantly, I mean, they've delivered on execution, and it's all cross layers, not just chips, not just CUDA, not just Omniverse. It's also the connectivity and the startups that they're funding along the way.
And the China story, I mean, do you view China as a major competitor or as a buyer?
So it wasn't clear when we had that bizarre deal in the White House on whether you can sell chips or not sell chips. I think what the conclusion is, with the single die technology, it's not something that NVIDIA believes is going to be detrimental to U.S. National security. And I think that they believe that they can continue to deliver versions that are single die of Blackwell, of the next set of chips that they have coming forward, and still be a couple generations ahead. What they're hoping is that China does buy NVIDIA chips, and we do see this. There's leakage through Dubai, leakage through Singapore, where these chips are being on the black market and coming back into China. So there is demand, and it's up to $30 billion that we saw previously before any of these bans that were getting into China. So it potentially could be a really big market should the trade tariffs come back, should the trade wars end and China stop saying that there are backdoors on NVIDIA chips, which is not true.
Bullish on this name, right? I mean, you see it could be $240, is that right?
220.
Yes. We believe there's 240 in there, and part of it is because when we look at the global AI market, Constellation Research sees it as it's 275 billion last year. We're seeing it's growing about 34.3% CAGR. It's about a 1.67 trillion market by 2031, and that's just 2031. This doesn't include all the other companies that are starting to jump into this space in services, in applications, and companies like Walmart, companies like Uber, companies, regular companies in the marketplace that are using AI to advance their capabilities.
And so as the demand for tech has sort of stayed alive, it sort of dipped down and now it's back alive once again. In fact, you're seeing price target raises for names like NVIDIA and AMD and such. How do you go about trading this kind of name? Do you buy it ahead of the earnings? Do you wait on earnings and buy on dips? What's the plan?
You know, the best thing is to buy on dips and also think about all the other accessories along the way. So if we think about all the, if you look at Horizon 2, Horizon 3, and where the AI boom is headed, you should definitely be looking at areas around energy. What's going to power this? Small modular reactor companies, Oklo, companies like energy, like Constellation Energy, Duke Energy, those that have nuclear power plant and capabilities that are available. You should also be looking at all the application companies in the space, from the ServiceNows to the Salesforce to the Adobes to Oracle to companies that are actually building out Palantir and C3, the ones that are building out applications for consumption. These are the ones that you see lots of opportunities with.
And for this round today, you think it's going to be a beat and the stock goes higher? Is that the final thought here?
Well, that's what channel checks are saying, and I think they're still going to hit their numbers. They have not hit their numbers if in 8 quarters, so you never know, but it's been a great streak and a great run, so I think all money is on the fact that they're going to meet their numbers. It's really the forecast that's going to dictate what happens next. Their belief in where the AI market's headed will dictate where everybody else falls into line.
Ray Wang, CEO of Constellation Research, author of Everybody Wants to Rule the World. Thank you, Ray, for being with us. Really appreciate it. Coming up next, how about some market opportunities for your portfolio? Larry Tantarelli will explain. We'll be right back. The Dow's up 177.
Ascending triangle, yeah. Ooh, that looks good.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Penelides, and we're talking Cracker Barrel. This name has certainly gained a lot of exposure in the last 24 hours. It was scrapping its new... It scrapped the old logo, then brought back the old logo again. We're going to get all these details here because we've seen this moving around as well. Sam Bottas is with us and has a lot of the details on this. It isn't. What goes on with Cracker Barrel?
Yeah, so they changed the logo and people weren't impressed because it was a bit too minimalist, and the issue that people had with it was that they removed what was very nostalgic and really made the brand what it was, and that was the picture of the iconic man leaning on the barrel, which was scrapped in this new logo. And this was launched about a week ago alongside a new menu, but there was certainly some backlash from those out there, and even Trump weighing in at one stage too. So they have actually changed it back to the original logo now. Now, when they announced this more sort of minimalist logo, which is basically just the Cracker Barrel wording and removing the picture, we did actually see the backlash and then the shares selling off subsequently, but then this was reinstated and we've seen it rallying ever since. As you can see, it is up today alongside the broader restaurant stocks, which are otherwise down. Here is the logo, as you can see in this picture here, of the iconic man leaning on the barrel, which is known as the old timer. So that very much is what got everybody sort of up in arms, so to speak. As I said, Trump getting involved as well, criticizing the rebrand, calling the company to change the logo. Then he came out off the back of the 180 saying congratulations on changing your logo back to what it was. All of your fans very much appreciate it. Good luck in the future. Make lots of money, and importantly, make your customers happy again. He did say that they got $1 billion worth of free publicity and should play their cards right, make Cracker Barrel winner again. So, as I mentioned, we did see shares falling off the back of the initial announcement, but we're back up again following the reversal, and it just very much seemed that investors are cheering the fact that the people have spoken, Nicole.
Yeah, food, rocking chairs, cookware, you can go in and eat. Created in 1969 in Tennessee. You know, in Long Island, we don't really know much about Cracker Barrel, but it's very interesting to have seen this logo and the discussions that went on about it. So thank you for that. Really interesting. Thank you, Sam Bottas. Great to see you. Well, we have Larry Tentarelli with us, Chief Technical Strategist, Blue Chip Daily Trend Report, standing by to talk more about the action. What are you seeing here? How do you interpret the market action today?
Good.
Nicole, great to see you. I think the market is in a little bit of a wait-and-see phase.
That's what I said.
NVIDIA's earnings after the close today. That's obviously going to be a very big market driver, not just for tech, but also for the AI-related stocks like infrastructure, nuclear power, things like that.
That's what I said.
We've got the jobless claims tomorrow. We've got the PCE report on Friday. So I think this is the quiet before the activity picks up over the next 48 hours.
So in the meantime, look, NVIDIA, how positive are you on a name like NVIDIA?
So technically, I'm very bullish on the stock, but the thing with earnings, we never know exactly what they're going to report, and we never know what how the market's going to react. So technically, the chart is set up very well. NVIDIA has a very good record of beating earnings and raising guidance, but charts really cannot predict the earnings reaction. So I'm bullish on NVIDIA. I've been in the stock for a while, and we'll wait to see what they report today.
And what do you think about the fact that the S&P 500 has hit
Well,
a
I nailed that bottom
record
today.
high today?
I think that's great. So the S&P 500 breadth has been broadening out over the past 30 days or so. The advanced decline line just made a new all-time high, so that shows that breadth is broadening out. And you're seeing sectors that were laggards before. Home construction's improving. Regional banks are breaking out. The big banks and brokers are breaking out. Aerospace and defense is breaking out. Small caps are breaking out. So you're seeing the market really starting to broaden out, which is a bullish signal.
And in the meantime, what kind of stock picks do you have for us? I know Corning is in there. Tell me a little bit about some of the picks and why you choose the ones you choose.
So you know me, I always look for strong stocks in strong sectors, and I want to see technical uptrends. So Corning is a leader in technology. It's breaking out to new highs as we speak over the past few days. They just got a $2.5 billion investment from Apple to make the glasses for iPhones and for Apple Watches to make the glass covers. Very bullish chart, breaking out. Any stock that's breaking out right now with the S&P 500 should be considered a technical leader, and you can see that Corning chart is very strong, and it's been strong after their earnings report.
And then we talked a little bit about NVIDIA already. How about Newmont Corp?
So Newmont is in the gold mining sector. They're the largest gold miner in the markets. They're the only gold miner in the S&P 500. It's a very bullish chart. You can see that it's breaking out to multi-year highs. And Newmont is a little bit of a weak dollar play. It's also an interest rate trade, and it's a very strong chart that's finally starting to catch up. Gold made new all-time highs a few months ago. The gold miners were a little bit of a laggard, but now they've started to lead and break out.
And then what about the home builders? We've been talking about all things about mortgage apps, about pricing and such. How do you think the home builders could do going forward? You like the ETF?
I do. I like the ETF. I like some of the individual home builders as well. But what you'll see with the ETF, it's in a very strong uptrend, especially over the past 30 to 45 days. And the market has moved into these home builders ahead of the expected interest rate cut. So last week, when Powell flipped dovish in that press conference that he had, the home builders were up about 4 or 5% on the day. So this is a group that should outperform if we get that rate cut in September.
And then also, I think about RTX, and we've been talking a lot about the defense companies because the Trump administration has been looking at this group very closely this week. Your thoughts on a name like RTX?
Now, keep in mind, defense was bullish even before this week, so RTX is one of my favorite stocks in one of our favorite sectors year to date, which is aerospace and defense. It's got bullish tech.
Boom, boom. 64.85s right now. With 16 more minutes to power hour. I'll be right back. Been a tight range here. I'm scalping for like $40 right there. Been a sideways Darvis box on NVIDIA. We'll be right back. Well, that's strange.
Worried that some of this is short covering. You said you have a sell valuation.
Have technical difficulties.
Yeah, that is a concern. We list that as one of the biggest risks to our opinion. But we do think, right now at valuation, I think they're trading almost at 40 times, this year's earnings, which is steep, for any apparel retailer, and they're in the department store category. So we think they should trade more at about a 10 times forward multiple. So, we are worried about that short interest, but we think overall we're fundamentally based, and we think the fundamentals don't line up for Kohl's.
Are you worried about some of the same reasons, Christine, about Kohl's, or no?
Yeah, Kohl's has been in a tricky position. We know over the last 3 years, annual revenues have declined year over year. They've cycled through three CEOs at this point. They're with interim CEO Michael Bender. There were some bright spots in the report, of course. That partnership with Sephora seems to be turning out really well, where they've implemented Sephora boutiques within the department stores. But there's certainly a lot they're trying to do to woo back consumers. As your other guest said, they do compete with off-price retailers, which we saw TJX companies just performing really well last week, and they're getting those customers that are looking for a bargain. Some of the ways that Kohl's said they're going to try to compete is to offer exclusive brands at lower price points, and then looking at their coupon and loyalty programs. So we know a lot of consumers really rely on those, and they're trying to make those coupons applicable to a broader range of products and brands. But yeah, overall, Kohl's has been in a bit of a tough position for a few years now.
And Zach, what about so many of the other names, TJX, Target, Walmart, Costco? Are any of those names in your mind still leaders?
Yeah, we do think TJ Maxx is well positioned in this environment. We actually have a sell rating on the company just strictly off of valuation. They're obviously gaining market share from the likes of Kohl's, and maybe even Target as well. So, we think they're a leader in off-price. We like Ross more currently just because of the valuation. But we do think that TJ Maxx is taking market share right now.
We're at the 50 right now.
You also, by the way, Christine, you're
That's where we hit last time. Tilray's at 137. Question is, are we going to hold this right here? We got 6 more minutes to power hour. Trade's calling my name here real soon. This is it. Got to hold. 64.85 is at 255, 260. $64.80 is my support level. Does it have another move up its sleeve? I don't think so. I think we're going to come down and hit the 200. It's a tough one to trade today. I've only done like 3 or 4 trades. So I want to buy here, but I keep thinking it's going to pull back, and then NVIDIA's earnings are going to come out and prove everybody wrong or right. Prepare ye in the name of the Lord. Yep. I'm getting ready. Rosie O'Donnell says Botox was a bad mistake. We're waiting. If it dips enough, I'll go to 6480s again. Okay, we're kind of found us a support here with the long-legged doji spinning top.
His earnings coming up after the bell, so there is, despite the thought that this might be a day where we wait for Nvidia, pretty strong day by the market. Can't really argue or discount the fact that 9 of the 11 sectors are higher.
Well, certainly, and NVIDIA is a driver, but not for 9 of the 11. We'll get to NVIDIA in a second, though, but I do want to talk.
Oh, you don't know what the hell you're talking about, chick.
They're up more than 36% after they beat on the top and bottom lines, gave an upbeat forecast. Can you break some of that down for us, Kevin?
MongoDB, we covered this yesterday on the Schwab Network, and this is a company that had been beaten up for a while. Well, you can't say that anymore, can you? Their revenue was $591.4 million, an increase of 24%. Subscription revenue, $572.4 million, 23% higher. Year-over-year services revenue, $19.0 million, an
now
increase of
power hour
33% year-over-year. These are big numbers, and the stock was beaten up going into this, but boy, the big percentage winner by MongoDB. So pretty solid, and of course, other stocks are rallying on that news, but yeah, big numbers out of MongoDB. Part of it's probably a relief rally because the stock was under pressure, and part of it is solid numbers going forward, Marley.
And they had such good performance, and I think really important on the
So
call.
her name's
They
Marley.
said they've been pursuing these deals with these larger companies and sacrificing some of the relationships with some of the smaller, more mid-sized companies, and also to have them come just ahead of CrowdStrike and Snowflake. Maybe indicative of what we're about to see. Certainly, as I'm pulling up CrowdStrike, they're up on the day ahead of their earnings. As far as expectations there, do you think we're going to see an equally good performance here?
CrowdStrike is such an interesting company that we've frankly learned so much about over the last couple of years since their upgrade outage that we had. We realized how big of a footprint this company has. Here's what they're looking for. They're looking for 83 cents earnings per share on about 1.15 billion in revenue, Marley, but it'll be a lot more about what they talk about. Guidance, their vision for the rest half of the year. Remember, Palo Alto Networks, really a competitor of CrowdStrike, had a great earnings report just a short time ago. So I'm looking forward to the CrowdStrike earnings. Should be a good one. They are the leader right now in cybersecurity. So
God, I wish this thing would do.
Let's watch how
it's just
they
hard
go,
to
'cause Palo Alto
decide.
did extremely well. Let's see what CrowdStrike does.
No, these days like today are hard for me. Not moving much. Baby candles. I like more volatility. I'm just going to be patient and wait. See if it just comes down here. I don't want to buy a put. I'll just wait for the calls. Prepare you in the name of the Lord. Tweezer bottom. Come on, baby. We're waiting for you. 64.80.14. That should raise it to 50. Uh-oh. Can we get these at 120? A buck? Oh, here it is. Right now. $1.35. 1.35. Get it. Crowd's wondering what's going on here at the sports arena. Damn. Fuck. Damn it. Oh, I didn't get a lot, but I'm in the second. Oh boy. 65, 135 and 85. Shit. Hokey pokey. Jim, you have a problem. That kind of sucked. Oh, God. Oop. You can do it. Let's turn around. I was thinking down, but I'm thinking down. Come on now. I waited for that 200 and I just did it and boom. Big old fat knife come in. So Rosie O'Donnell regrets having Botox. Oh, God. You know. Yo, you called? Yeah, I called on accident. Oh, I see. What are you doing? What'd you do? Just belch in my ear?
Yeah, I'm on lunch and I was eating a cup of noodles and drinking the broth.
You're disgusting. I'm sitting here talking stocks. They heard you belch.
That's fine.
Yep.
Hey, good luck, everyone. All right,
Okay.
I'll let you go.
Bye.
Bye.
Come on, baby. Let's go for it. Marley. You could grow on me if you weren't so liberal. But you're no Caroline. I miss Caroline's freckle on her right boob. Come on. My average is 110. I got 135 and 85. And I should have bought 10 at 85. Come on. Break the 200. It probably hit the 200. Okay. Go away, little girl. Go away, little girl. Come on. Can we get to 6482, please? Or are we going to break the 200? You know, I really would appreciate it. That or I get out now and save my... Yes, as AZZ, YouTube. I didn't say ass, I said as. Oh. Oops. Well, this is going to get difficult. Huh. I got a headache. retesting. Give me $2. I knew we were going to pull back and just did it all of a sudden. I had it right in a way there for a second. Come on, let's go. I know there's some people stuck in this trade. We're at $1.10 where my even spot is. I should have bought 10 more 10.85 centers. I'd be out of the trade by now. Okay, come on. We have 35 more minutes left. Let's go. There we go. Come on. Don't stop. Don't stop. In the name of love, before you break my heart. Now we're above the 200. these off for now. Tempting to get out of this trade because it's got me all shook up. So I'm threatening. Let's go. I'm up 100 right here. There we go. Yay! Yay! 145. Hit the 63. I'm out. So this is a 63 EMA, and it'll run. I love song blue out at 140. There it goes to 155. Song blue. There it goes 155. Frickin' piece of dog manure. Reaching for some song blue. The 200 EMA, or the 63 EMA. Boo boo, a boo boo, a boo boo.
There's a dude down the street with his
Washboardjim.
Got a sneaky snake goes boom, 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 goes boom, 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 boom. Sneaky snake goes boom, 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 goes boom, 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 boom. Sneaky snake.
Break, I bet. $175, baby. Much more. I don't know how that happened. God darn it. 180. Can you believe that? I bet $700. Buck. Well, I just left $500 on the table, and I was really worried about that trade. I got it stuck in a knife and bought the dip, and it brought my average down to 110. And now, if you look at them over here on the strategy desk, they were hitting 190. Now it's cool, man, but I'll tell you what. Leaving $500 on the table ain't cool, man. There's something wrong with that. What do you think about that, Mr. Green?
Probably sets up a little bit better for traders, and this is not a recommendation.
It was a great setup for this trader,
and I waited. Like SMCI, or even if you're looking at a Broadcom for that matter, they tend to actually have pretty decent.
Right when I got in that trade,
so you're looking for stocks that have
like,
obviously a little bit lower float, maybe a specialty that's a part of the components for NVIDIA's GPUs that tend to see a little bit more of an aggressive move, either to the upside or downside. So we're looking for about a $9 move to the upside or downside for NVIDIA. But if you're looking at SMCI, there's only about I just calculated it, it's only about a 3.7% move to the upside or downside if you're looking at the option straddle right now, which is fairly underpriced because every single earnings announcement for NVIDIA does actually create a pretty decent reaction when it comes to SMCI. You're talking about at least 6%, 8% moves after the fact, next day or 2 days later. So keep your eye out on a stock like this. That might actually be able to move off of the commentary from NVIDIA.
Kevin, thanks for breaking all of that down for us. And you may not be with us for NVIDIA, but you will be back shortly when we take a look at Snowflake and CrowdStrike's earnings. So I'll see you shortly. But that's Kevin Green. Thanks again for Options Corner. And coming up, we'll check in on the commodities market. We'll take a look at today's trends in energy and in the metals market as well. Stick around. Market on Close. We'll be right back.
Who gave you that job? I want Caroline back.
believe me, when it comes to investing, you'll love
Carl's way is the best way.
Take a left here, please. But there's a Carl's
It's the
way
only way.
is the best way.
Is it?
Is it? Now, I don't need your mouth. $2.35. Randy. Randy. That hurt. I mean, I feel like it's one of them off days, but I waited for the pullback and this didn't. If I just waited probably 10 seconds before I took that trade, and I waited all day for that. It reminds me of a fish named Larry. You ever seen the fish Larry? I think Larry's gone. Did I erase Larry? I think I did. Sure did. That sucks. Huh. God, look at that. $3. Well, that's 16. Oh my God. $1,600 on the table. 140. Damn. I see it.
In WTI, because it looks from a global perspective, there's still substantial supply, and unless we see a big shift in economic activity, and that's just not necessarily been the case so far, it does appear that the market's balanced, if not even a little bit oversupplied, and I think that's keeping a lid on some of this price action.
So outlook through the end of the year for you, Dan, in terms of oil prices, barring any major geopolitical event, an unexpected event. In this case, are you thinking high 50s, low 60s? Well, what are the technicals indicating to you?
Yeah, yes, we think that there's going to be some headwinds for this space that will continue through the rest of the year, and we certainly could see it taking out that 61.5 level, which is the recent lows here. And if that's the case, then I think that you could see a 50 handle by the end of the year. High 50s. I don't think it's going to break too significantly below $60, but we do think that there's still some risk to the downside here based on some of the dynamics in the marketplace.
And so let's move into metals. I'm just looking across the metals today. Gold ticking a little bit lower and now they're up again. Silver mostly unchanged. As far as the metals are moving, what are driving those markets right now? I guess we'll talk specifically about gold first, and then take a look at copper and silver.
Gold's the outlier today. Mm-hmm. Yeah, actually, Marley. Yeah, gold now higher 3 out of the last 4 sessions, regaining this upside momentum, and really not too far off those all-time highs as we close in on 34.50. So again, I think the lower rates, particularly the short end of the curve now moving to the lowest yield since May, is a tailwind for gold. There's still some geopolitical tensions out there that have contributed to the buying pressure. The U.S. dollar's found some stability here, but nonetheless at the lower end of the range as well. And central banks continue to buy gold. That's not a secret. They've been doing it for years. I think that as gold does realize any kind of weakness, that you've got what effectively is a put in place underneath this market, because central banks are very actively buying gold, looking at the potential for that value kind of play moving forward as a store of value based on the dynamics in the currency markets, cryptocurrency, the dollar, where that's all going to fall out. And I think basically central banks feel that they need to continue to buy gold to stabilize potential impact of any shakeup in the currency markets moving forward.
And as far as the other metals, gold, the outlier today, and I'm looking at copper, not a huge down day for copper, but, copper's just been beat up since its exponential sky-high rise on that tariff news and then the plunge that we saw following. What's the long-term story for copper?
Economic activity. I imagine China continuing to find any stability or becoming more active as far as their growth patterns moving forward. I mean, that's the most obvious point to look at, because China is the biggest consumer of copper in the world. So that's where the market focuses. But there's other things, mining being one of them. But overall, right now, after that shakeup, and then we did see that big sell-off in late July, copper's been pretty tight range here, and now giving up some ground today after some days of slightly higher price action. Continuing to find just a tight range because I think it's just the market still kind of waiting to see how the tariff situation works out, how the global trade situation works out, and economic activity from a global perspective. Although it seems to be hanging in there pretty well, there's certain pockets that you're not just seeing any significant growth, and also the potential for some weakness, and also coming out of that Far East region. I mean, Australia now, RBA even this week indicated that they're going to probably cut rates moving into the fall. So you're just not seeing the economic activity, I think, necessary to continue to push copper higher.
Dan, we appreciate it. As always, thanks for being with us to talk commodities and also a little preview on NVIDIA, since we have to talk about it with everyone because it is the big story of the day, but we appreciate it. That's Dan Deming from KKM Financial. And coming up, we'll close out our market section and we will get the big picture from our team at Charles Schwab. Stay with us.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning movers bring traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. We have just a few minutes left in our trading day. That means it's time for the big picture. So we will welcome in our team from Charles Schwab. Joining us today is Mike Townsend, the Managing Director of Legislative and Regulatory Affairs at Charles Schwab. Mike, thanks for being with us. We'll just start with the Fed. The Fed governor's headlines that we continue to get seemingly day to day. First, are those headlines leaving us anytime soon?
Yeah, Marley, I don't think so. And, August is supposed to be the quiet time in Washington, D.C. This is usually one of the slowest weeks of the year. And I feel like this week has already lasted about 8 days, and we're only on Wednesday. But it's true. I think, Fed personnel issues are obviously going to dominate things probably for the next few weeks, because not only do we have the president's unprecedented move to fire Fed Governor Lisa Cook, that's probably going to move quickly to the courts because she's challenging that, and we're going to have to see how that plays out. But also, when Congress comes back next week, the Senate Banking Committee is going to start the process to try to confirm the president's nominee for the other vacant seat, the seat that's already vacant on the Fed. And that nominee is Stephen Myron, the president's one of the president's top economic advisors. So that process is it was already going to be kind of controversial, and now with the backdrop of the Lisa Cook situation, I really think there's going to be a ton of attention on that confirmation process.
I do too.
So I don't think we're going to get away from this anytime soon.
It's so interesting you say that this is the time.
Let's see,
Washington's
we
supposed
got
to be on
3
vacation,
touches
and I
down
feel
here
as though we've got
already.
Headline after headline after headline. But specifically with this Lisa Cook issue, we saw gold pop on this news, and it is affecting the broader market as
Why?
a whole.
She
And
wasn't
we have the
much.
confirmation hearing coming up. What are your expectations moving forward on both of these issues? We already know from her representation that she does plan to bring a legal process if her firing is truly called for. And then we have, what was already going to be a potentially contentious confirmation hearing. How do you see both of these things progressing, and how quickly? Because the
Okay, we're coming back.
is important, knowing we have, Fed meetings coming up.
Yeah, Marley, I think that's
How many
absolutely
times?
right.
We got,
The big
6
question
minutes.
is
I
how
ain't
both
messing
of
with
these
it.
events are going to affect that next meeting, which is only 3 weeks away, September 16th and 17th. Now, on the Stephen Myron confirmation,
I could do
theoretically,
110
it's
here.
possible
This
for
is
the
where I
Senate to-
wanted
to
it.
come back next week.
Oh,
have a
shit, the
confirmation
spread.
hearing, advance him out of the Senate Banking Committee, and then potentially have a full Senate vote the following week. That's possible. That would
There's
be
a 60-cent
highly
spread there
unusual,
for a second.
Very, very tight timeline.
Right when
I
it
don't
hit
know
my
if it's feasible
thing.
that they can get it done, but I'm open to the possibility that they could get it done and have him seated in time for that meeting. And then obviously the Lisa Cook situation, I don't think anybody knows what the timeline is going to be on that. I expect the courts will, provide
In and out
some
within
sort of,
10
At
seconds.
least initial ruling, whether to stay the situation while, further proceedings unfold. But there has to be some clarity about whether she's going to be at that meeting as well. So I think these two situations
Could have probably got
are
that
gonna,
out around
unfold in tandem.
140,
It's really
150
gonna be
if I'd have
kind of
bought
an
it at the
unusual
market.
situation, because we're going to come up to that meeting without fully knowing who are going to be actually voting on monetary policy at that meeting.
And are these issues pushing the conversation we were having before this about who our next Fed chair is going to be? Is that now a back burner issue while we get through these two bigger issues of who's actually going to be sitting and voting?
I do think, strangely, it is kind of a back burner issue. There was a sense, I don't know, a month or so ago that the president was pretty close to naming somebody as the successor
Boom.
for when Jerome Powell's term as chair ends in May of 2026. But more recently, we've heard that the candidate pool has expanded to close to a dozen candidates. Scott Bessent, the Treasury Secretary, is overseeing that process. Kevin Hassett, who is one of the contenders for that, he himself said he thinks it's going to be a few months before the president moves on that. So I do think both of these sort of more urgent situations push that to the back burner. And I think it could be, well into the very end of the year or even into early next year before we hear who the next chair nominee will be. So kind of an unusual turn of events there.
And moving away from the Fed now, Mike, and into Congress, Congress returning back to D.C. next week. Government funding obviously will be the big ticket item everyone's talking about. Are we at risk of a government shutdown here? Can they get it done?
Yeah, I do think we're at risk of a government shutdown. Congress is supposed to pass the 12 appropriations bills that fund every government agency and every federal program by the end of September each year, because the government's fiscal year starts on October 1st. They haven't made much progress on that, and that in itself is not unusual. They almost always have to have what's known as a continuing resolution, basically a temporary agreement to keep funding.
I've made at least $1 a contract on that one.
Underlying bills. But I think the dynamics on
Off my
Capitol Hill
support
are
line,
so difficult right now between the Republicans and the Democrats.
1, 2, 3,
that it's
4,
gonna
make
it
a little
really
bit
hard to
more.
even get an agreement for a temporary funding agreement. So, I think a government shutdown is a real possibility. I don't know
You
whether
don't
it will
know.
happen on October.
I'm done with you. With you and this Marley or whatever the heck her name is. gosh. I was just in mad paper trading that, and I was going to get in it at $1, and it went to 160, and all of a sudden it's at 50. Just in a snap of a finger. You almost got to be in the money on these if you want to be safe. Well, I mean, today was, I didn't have no red trades. I made 5, but it's felt like I was just being waiting and waiting and waiting, and waiting, and you know, one of them kind of days where you just, you know, in the back of your head. I mean, look at this. I called the pullback, and I could have traded the puts, but I didn't. And then when I got in the trade, it knifed on me, and then it bounced right back up to the top. I mean, that beautiful V right there. You know, that's the way you do it. If you can just, but I was still kind of confused. We traded the channels perfect, and it just felt like forever. And actually, you know, we've got the double bottom right here where I added the 85. And that was a big knife. I mean, it didn't take long for it to get down there, is what I'm saying. 5 seconds. When I got in the trade, it just boom. It wasn't a slow gradual. So I didn't know what to do. I was stuck in that sucker. And then when I bought the bottom, I should have bought 10 of them, and I'd had 15 contracts. Then it runs to $3. I left $1,600 on the table. So I'm gonna go get my tan going, and I'm really looking forward to this weekend. It's an awful expensive weekend, but I don't get more than 4 days off. I haven't got more than 4 days off in 20 some years. I used to take 10 days at Winfield, Kansas, and I did that for 15 years straight. Now that's a vacation. Just playing music all weekend, all week, all 10 days. And I just want to be real patient today. I think funk's rubbing off on me. We got NVIDIA earnings coming out. This is going to be a market game changer. I called NVIDIA this morning. First thing this morning. See, I don't know what he saw in a bullish setup. Don't look like a bullish setup to me. Yeah, it's at resistance. I'd rather see it down at the bottom. We got a Darvis box. A whole month long Darvis box. So that could be bullish setup. Well, okay. I hope everybody had a good day.